So hello everybody, welcome back. So we are having another session of the Commodity Week, and it's always a pleasure to have all of you with us. As you are all aware that we had some very exciting and excellent sessions over past 4 days, and today is the fifth day. And today we are talking about chickpeas and pulses. Before that, we had some four very exciting and interesting discussions on various commodities. And this is where actually, if you know that the markets, how the dimensions of the markets have been, and also about overall understanding of commodity ecosystem is what was our interest or reason to run this commodity week. So before engaging into discussions with our esteemed speakers, let me take you straight away in overall, I would say, narrative setting. Because as I said, like in today, we'll be talking about chickpea as a focus, but the theme is India's pulse and the global protein transition. We are already seeing some of the changes, challenges, opportunities emerging in this sector. And today we are gonna be talking about that. As I was telling you, we had some very interesting sessions. We started with maize on 5th, wheat on 6th, rice 7th. Yesterday, we talked about soybean. Today, we're talking about chickpeas and pulses. And tomorrow again, which is our last session, we'll talk about sugar. And let me dive deep into some of the numbers. And as you know that, let's start with the overall outlook of the pulses. And then we eventually get to the important commodities within the pulses basket. So if you see the current production of pulses is approximately 93 million metric tons, that is 225 estimate, against 119 million metric tons, which is a normative demand. That is what bare minimum people should be eating. And this is where it shows that there is still humongous opportunity available when we talk about pulses. The yield of pulses has increased from roughly 637 kgs per hectare way back in 1961 to 968 kg per hectare in 2024. That's a CAGR of 0.66%. While it looks, I would say that pretty okay, but when you compare it with other commodities, unfortunately, this yield growth has not catched up when we talk about grains, when we talk about oil seeds. So maize, soybean, they have shown humongous improvement when it comes to yield, while the pulses has been, I would say, a sore loser so far in competition for these commodities. So if we talk about next 10 years, we are looking at the global normative demand of pulses to be close to 150 million metric ton. And currently 95 million hectares are being cultivated for pulses. But in this scenario, we'll need 50% more land over next 10 years, which we don't have. So we have to start looking at how we can increase our productivity. Coming to, I would say, the lion's share, as you all know that India is the largest producer of pulses, is the largest importer of pulses, is the largest consumer of the pulses. Close to 30% of global trade in pulses is driven by India. And when we look at the Indian numbers, so in 2025, we produced roughly 25.2 million metric tons of pulses against 24 million metric ton in 2024. So we have improved. But if you see that we go in 2020, we had already touched the levels of 97.3 million metric tons. So there is a dip down when it comes to overall production of pulses in India. India will be importing close to 5.5 to 5.8 million metric tons of pulses in 2024 against 7.3 million metric ton, which happened in 2025. So 2026, we are looking at around 5.5 million metric ton against 7.3 million metric ton last year. And will consume roughly 29 million metric ton, up 1 million metric ton from last year. And against the normative demand, again, this is very important, normative demand, that how much India should consume of 38 million metric ton. So Indian pulses acreage is roughly 27 million hectares. India will have demand of 36 million metric ton by 2035. If I just go by simple increase based on the current growth, but if I go with the normative demand, we are already looking at, I would say that the deficit from this of close to 7 to 8 million metric ton additionally. So we can consume roughly 43 million metric tons by 2035. But eventually you will see that because of various factors, we'll have demand of 36 million metric ton. Now let's come to the overall projections till 2035. So if you see that 2000 onwards, there's been consistent increase in global production of pulses. And 2025, we looked at 93, and 2030, we'll be looking at 104, and by 35, 112 million metric tons. Pretty lower than what actually I would say the global normative demands are. Indian production, as I said, we had a little bit improvement in 2021 and 2022, but then actually again that it has gone back to the lower levels. But when we compare to 2000, India will be nearly tripling its production by 2035, which is also the government's ambition of making India self-sufficient in pulses. But I would say that that's a good vision thought, but in reality, we'll still increase our imports. So if I go what India would be importing, so India would be importing, as I said, roughly 5.5 million metric tons in 2026, and by 2035, roughly 9 million metric ton. And again, it is a substantial part of the global trade, which will reach close to 31 million metric ton by 2035. Now let's see the import breakdown of overall India, how it stands. So if you see that we'll be importing highest amount would be of lentils of 1.6 million metric ton. Desi chickpea. Last year we did pretty well, and some of the data you'll find it would be having a differences for very simple reason that India goes with typically year like 2025, 26, that is a marketing year, and globally we go with the calendar year. So some of the data when we are converting it into calendar year and the marketing year, there is some variations. So that we will have to understand and appreciate. So Desi chickpeas, last year we did 1.5 million metric ton. This year we see a substantial reduction in that. We'll talk about some of the reasons for that. Lentils will be doing more than last year. Yellow peas, again, lower than last year. We are having too much of supply. In fact, some numbers suggest that we are having close to 0.7 million metric tons of Desi chickpea plus yellow peas available on the western ports of India. Now, black mape, I would say as good as last year. Peach and pea, we might see a little bit of dip in imports. One of the reasons behind that is that government is having close to 0.7 million metric ton as current carrier buffer. Now, when we talk about total numbers, 2024-25, we were at 7.1, and 2025-26, we would be at 5.4 million metric ton as overall imports to India. So there is a dip in import for sure. The numbers are already showing that. If you see that the first quarter of this marketing year, we have seen serious dip, unlike in the last year, that is 2024-25. Let's go to Desi chickpea. So Desi chickpea, when we look at the holistic picture, global holistic picture, right? We are looking at production of roughly 13.7 million metric ton, global trade of 1.7 million metric ton. Again, the dip here is that India would be reducing its imports. That will impact definitely the global trade. But some of the other markets will chip in a little bit of that reduction. But overall, there would be a dip in global trade. Supply is very robust because we have pretty decent supply carry of 1 million metric ton and increased production. And again, increased production also is connected to India. India is looking at a pretty decent crop this year. As of now, because still there are a month and a half to harvest. Consumption, because the prices are low, whether we talk about imports, because if you could recall, last November when we were looking at $900, right? This November you looked at roughly $580, $600. So there is substantial reduction in the import prices, and that has also led to enhanced demand. And there is some movement back from yellow peas to Desi chickpea. Not, I would say that back to the normal, the previous years when the yellow peas was not allowed in India. But still, there is a recovery, and based on that recovery, we also see because Indian consumption will improve, there would be improvement in the global consumption as well. So again, because of good carry, good productivity, and not sufficient increase in consumption to counter that, we'll be having a humongous carry of roughly 1.9 million metric ton as we enter in 25-26. Now let's talk about the supply and demand for India. So India, you see that we started with the carry of roughly 700,000 metric tons production. This is that is important. Like, we are seeing 10% increase in production in India in this chickpea. So that will take the production numbers to 10.3 million metric ton. Import, we see, as I said, like, half, literally, like, it is going to be half than what we did it in last year. Supply, because of higher productivity, because of reduction in import, is balanced, but more than last year of 11.75 million metric ton. Consumption, again, as I said, because the prices have been low and there is sufficient availability, there is again backward switch from yellow peas to desi chickpea in specifically in the basin industry. So you start seeing that the consumption would also improve by 500,000 metric ton to 10.70 million metric ton. We are also seeing a little bit improved export because the chickpea flour, when actually you are having blending with yellow peas, it becomes pretty competitive in multiple markets. So we are looking at, like, doubling of export, while India doesn't export too much. It is like, hardly 200,000 tons, which we are anticipating 24-26. In 24-25, it was like, meager 100,000 metric ton. Ending stock as good as last year, just increase of roughly 150,000 metric tons. I am also trying to cover red lentils for very simple reason is that they are also a masoor, or that is a kharif crop. So here equation looks, the global equation looks again pretty solid. While the carry for this year is lower than the last year because there have been depletion of the overall carry. Again, India is one of the strong reason for that. And this year we see production improvement. We are seeing production improvement all across. We have seen improvement in Canada. We are seeing improvement in Australia. And India, I would say that will remain sidelined. Not too much of changes. So hence you see that overall production will increase to 4.9 million metric ton. Consumption also, we are seeing that is not going to increase too much, hardly like, a little increase, because already we have seen because of lower price of masoor, whatever substitution was supposed to happen, specifically in markets like India, has already happened. So not too much of, I would say, deviation when it comes to consumption from last year on a global level. Ending stock flat, as good as last year. Now let's come back, to the number in 2024-25 and 25-26 pertaining to India. We'll be producing a little less than last year, right? Close to 1.5 million metric ton is what our production is. Last year, the carry has dwindled a lot. It was just 340,000 metric tons. And that actually, put us at the need for a higher import. So India would be importing close to 1.6 million metric ton. And as the price of lentils are pretty, I would say, bearish as of now in global markets. And that also gave a little bit of, I would say, interest or parity for import to happen. And when it comes to, the supply side, as good as last year because of the import plus reduced production. So both balance each other out. Consumption, little less than last year. Again, as it is also having the yellow pea phenomena, where actually, we are seeing that because of movement of yellow peas in multiple savories as well as processed food market, right? It has created a little bit of dent in masoor as well because yellow peas crashed like anything. Price of yellow peas had crashed substantially. Export hardly anything. Ending stock better than last year. So with that, actually, I would like to end my initial views. And as I said, these are numbers. These are not government numbers. These are numbers which we create, we generate, and we work with different stakeholders to do that. And hence, I would request, my first speaker, Mr. Binod, to join me. Hi, Binod ji. How are you, sir?
Yes, Deepak bhai, all fine. How are you doing?
All good, sir. Good to see you after a long time.
Thank you. Same here.
आपके कलकत्ता में भी सर्दी पड़ने लगी है आजकल तो, हाँ?
कलकत्ता में सर्दी मतलब कश्मीर वाली फीलिंग आ गई.
That's nice to know. In fact, I was looking at the temperatures, for past couple of days, because this is the time actually temperature do impact crops in India. We are having the multiple crops. Wheat is getting impacted, and we are seeing that even definitely chana and all that would also get impacted. So let me introduce you first, Binodji, then we get into the question answer with you. So Mr. Agarwal is managing partner of SGR AgriSteel, a leading international indenting and trading house. And it's a familiar name when it comes to global trade, both inbound and outbound from India, dealing primarily in pulses, which include chickpeas, yellow peas, red lentils, oilseeds, and various grains. He applies a visionary approach of widening the firm's reach into specialized items. Under his leadership, SGR act as the backbone for its client, acting as their sourcing partner rather than just a broker or an indenter. He take care of logistics to quality, ensuring that the consumer are able to get best of the world. Thanks a lot, Binodji, for joining. And let me get straight away into the first question. How
Right.
do we see the global desi chickpea and the yellow pea market shaping up in 2026, sir? All the way from Russia to Canada, your views?
See, each and every commodities we are seeing all are at bottom. So the price is more attractive as of now. So number of importers will increase. When the market was high, there was defaults, so people have come out of the market. Now, slowly and gradually, the market is settling at a lower level. So new importers are coming into line. Like there are people, those who were not have the money but don't have the business, they wanted to expand. So now they're seeing what we call this, they're seeing the prospect in pulses market now. So we very soon we will see a new financer or the new big houses. Those who are not into pulses, they will step into pulses market. And as far as demand is concerned, yes, the market is at bottom. So demand and consumption will increase substantially in coming month. That will keep the check in the market also and the price also.
Perfect, sir. I totally agree with you that there is a prospect of new players entering into it. And we have seen, in fact, already interest coming from some large corporations. And this time we are looking at Indian large corporation. Unlike in the past, when I was engaging with people, there used to be like, multinational, you used to do a lot of pulses type of business. And the domestic player used to have this view that it is too unorganized for us to take those risks unless we start seeing control of value chain across the globe. And this is where I think like it's a good news that new players would be coming in. Now, if we look at like the question between the yellow peas and the chickpeas, right? We have seen that substitution happening, and we have seen that like so much of speculation around information itself around yellow peas, whether there will be duty, no duty, and even yellow peas like it has been at its historical low, and then actually some oxygen they got it from government putting some duty, and even after that we have not seen that like the price improving so much, so that makes it still a very viable I would say substitution for chickpeas. Do you think yellow peas continuous inward movement would impact the overall import of desi chickpea in India this year?
Deepak bhai, yellow peas and chickpeas like chana. Some people says there are connections, some people say there are no connections. And both of them are correct in their perspectives. Now, yellow peas has already done damage to the chana well before the implementation of the 30% duty. So the zero duty window was for a longer period. Any substitution is not overnight. It takes time. So yellow peas was given a substantial time very strategically by the government, and the shift has already been done. After this 30% duty, we are not seeing any further shift from yellow peas to chana. So yellow peas is having his own market now, and chana is having its own market. So there won't be any more substitution now. Now, what we are seeing is chana is gradually increasing. Like it was 53 rupees some paisa in Western. Today we are seeing at 56 rupees. So 3 rupees jump in 10 days time is substantial high. If it goes like this, then obviously there will be a substitution between yellow peas and chana. If there is no big margin, like there is no big gap, so I don't see any more substitution between yellow peas and chana. Now, yellow peas market, if you come about the prices, there is no shortage globally. Okay. Now, yellow peas market again will depend on the policy of China. Because India, I don't think so there will be further any additional impose of the duty. 30% is fair average. But now, if China allows Canadian yellow peas import, then the whole gimmicks will change. Today we are seeing the yellow peas Canadian at around say 320, 325 level. If China comes in the market, no wonder we may see $400.
No, but Binod bhai, actually, in fact, if you can recall the last, in November, first week of November, we did a roundtable on pulses, right? And that time, I think Mr. Deepak Rawat, he was from Canada, talking about there was some discussion, some move where China was supposed to open up, right, the restrictions they had on Canadian yellow peas. And that time I've said that it's not going to happen. And I can tell you now also, based on my engagement, understanding, and discussions which I'm having, that's not going to happen. So that is, I am saying that it's a more on a speculative mindset that actually China is going to do that. China is very happy with what they're doing with Russia. Now, coming back, coming back to this pertinent question that, assuming that the world is what it is today, same duty in India. India is also not going to be changing too much of duty. At the same time, we are not seeing, again, I would say China doing too much of stuff, right, with Canada. In that, do you see that the possibility of dumping? Because, India becomes the only option for Canada. Canada doesn't consume so much of YPs. So do you see the price pressures there, possibility of price pressures there eventually? Because they have to blink sometime. They're having too much of stock.
The stocks is lying there since August, Deepak bhai. So price is already at bottom. When the market was around 310 level, we were thinking after 30% duty, the market will crash to 280 and 290. But after 30% duty, the market has gone up by 20%. So these are at bottom. If there is any further demand, the price will go up because every commodity has its own base price. 320, 325 is nothing, is the cheapest commodity as of now. So I don't think so there will be any price downward in yellow peas. And at the same time, I don't think there will be more dumping into in India because the players have burned their finger last season. So they are going very smart, slow and gradually, and they are importing basis on demand, not that price is attractive. Let us bring it and then do speculation. So speculation part is over. Those who have done a speculation, their position, I know, and the people in pulses industry, they know what they are doing, what stage they are into. So the balance import will be done and the price will be balanced. Basically government will be happy and the consumer will be happy, but it's a bad news for speculators.
That's a good news for everyone. Speculators having a bad news is always a good news for everyone. Now, coming to other origins you also work in, we have seen Bangladesh used to do a lot of imports of at least Australian desi chickpea. Similarly, Pakistan and as well Middle East. How do you see that panning out? Because India, as I said, we are seeing definitely reduction in import of desi chickpea from Australia. Now they'll also have to find some other origins.
You see, Bangladesh, Dubai, they all are very opportunist markets. And they keep watch on Indian policy and market. There are no, you won't see any speculator in other country except in India. Bangladesh political situation is, everybody knows. So there are no importer left. Virtually, I'm telling you, there are no genuine importers left. Only few are there. So the inflow is reducing there, and that is keeping check on the market. So there won't be any fresh demand from any country, neither from Dubai and neither from Bangladesh nor from Pakistan. They have already covered their Ramjan demand. So they are happy till March. They will come in the market after March. By the time India will be having its own crop, and it will be opportunistic buying for them, and they will come at a lower level, but not at current market or at a upper side.
Right. So with the very limited, you said that other regions are not also having too much of demand, and there is always Indian demand also. We are seeing a little bit on a lower side. So do you think after this the procurement window of the government, which will be starting, there is a possibility of further improvement in desi chickpea? Because that is the time where the government intervention also happens, and currently, while there were a lot of speculation of and hue and cry that MSP ke niche hai chana, MSP ke niche hai chana. Now chana is at the decent stage, and if it is continue that till March, I think farmers will not have too much of complaint. So do you see like, that the market to be range bound till at least like in procurement start, or also you see that during the harvest, the market arrivals increasing, there could be another dip in this chickpea?
I further don't see any rally. It may go up for next 5 or 10 days, but after that, I'm seeing correction in China.
Right. No, because India is a huge crop. It is like, 10 million plus crop, right? It's going to be until unless I think weather gods do some type of total, I am saying that turnaround, which doesn't look as of now. India is going to be good. So according to you, like, except another little bit of upside of say 2 or 3 or 4% max, then you are seeing that there is going to be correction in China. Am I right in understanding that?
Yes, there has to, because even if there is not 10 million, even if it is a 9 million ton crop, it's a big crop for India to handle. And again, it again depends on the Indian policy and the procurement. If the government is procuring, then the market will be stable to little bullish. If government just give a false assurance of that buying at MSP, blah, 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 and they don't buy, then farmer has to sell it in the open market. So there will be further correction in the market. So again, it's totally upon policy driven, not on consumer or not on, it's not a demand and supply basis, purely on government policy, whether they are going to buy on the MSP or not. As far as duty is concerned, I don't think so. The government has ever planned any extra duty on China after 10%. It was just a rumor spread by the speculators. It was never so too much down compared to MSP. And now we are almost closer to MSP. So there is no chance of additional duty on China. All the commodities prices has gone up in last 15 days. So there was a probability of duty in Masoor. But I think considering all the political situation and the geopolitical situation, tariff war, I don't think so the government will have the guts to increase duty on red lentil even also. And considering that we are seeing the super demand in US dollar last 3-4 days, people are not scared of the duty now. They're just buying at the current market price. They were not in the market at 480, 500 range, but they are in the market at 525 and 550 range. They are buying happily.
No, I agree, but Binod bhai, that has also been a problem in India, right? The people who last year were not taking for 630, they have taken desi chickpea for $900, right? So sometime we have seen like the how the Indian trade act, like even government is confused, right? How it moves. But coming to more important issue, right? Which I strongly believe that we need to delve upon is that the volatility of it, right? We have while seeing that large players coming in. Right, the type of volatility we see in pulses, we have not seen, at least and with respect to like those pulses being traded in India, we have not seen in most of the commodities, right, except edible oil. And do you think like this is gonna be the template, because so much of volatility like is not healthy for any of the, I would say, markets?
Each and every volatility has ups and down. Okay, it's like zigzag, and we are at the bottom. So it's a very safe level. So I don't think so any volatility will be there. Anybody is doing trade at current market, current level, he's going to gain the money or he'll be at par. I don't think anybody will lose money, at least in 2026.
Excellent. That's a good start for 2026. Binod bhai saying that if you enter today, you don't see too much of downside and there is a possibility of good upside. Am I correct in reading you, sir?
Yes, sir.
And sir, how do you look after August? Once like all the procurement and everything is over, because after August we see the magic happening in Indian pulses market. जो भी ऊपर नीचे होता है, कहानी starts in end of July or early August. What do you see like till that time also that the bullishness is gonna be there?
Not till that time. Bullishness will be, say, maximum up to Jan end. Then we will see
Okay,
a correction in the market. And as usual, we will see the bullish trend after May, and May. Like it
right.
starts from June and it lasts till September or October. And then the new crop coming up, numbers coming up. So the market get corrected. So from May onward, we are bullish on every commodity till October. And Feb
Perfect.
to May, it will be range bound.
Sir, one more question because you understand Bangladesh pretty well. Sir, how is the overall say, environment there? Like, doing business, is it safe? Is the payments coming out, or do you think the challenge is there?
Commercially, I'm not seeing any challenges there. But
Okay, you say don't go there, but on phone, if you are able to conclude the trade, then it's still money safe.
yes, money is safe. When money is coming late because it is backed by LC. So LC payment, which used to come in 7-10 days, it's coming in 1 month. But it is safe. It's a food. They cannot play around with the food item.
Perfect,
And
perfect.
you are, like you have to choose your partners very smartly. It's not like how rich they are, but you have to see how much more like moral value they have.
Yeah, that's true. That's true. So thanks a lot, Binod bhai. It's always pleasure to engage with you and get your insight. Thank you.
Thank you.
So now we'll go to Mr. Navneet Singh Chhabra. Again, I call him one of the sharpest mind when it comes to Kabuli Chana. So he's a globally recognized trader and director of Sheila International, which is also known as Global Garbanzo. He's famous in the industry for his single product concept, focusing exclusively on Kabuli chickpeas or Garbanzo beans for over a decade now. His expertise spans the entire value chain from monitoring the seeding patterns in Russia and Sudan to analyzing consumption in India or Turkey. Navneet is a frequent speaker at GPC conventions as well as other global conferences, known for providing transparent data-driven market updates that bridge the information gap between farmers and international buyers. Welcome, Navneet. It's a pleasure to have you, sir.
Thank you, Deepak ji. Thank you. I'm audible?
Yes, sir. Loud and clear. Loud and clear.
Okay.
Loud and clear.
Thank you
So,
for
sir,
giving the opportunity. In the 10 million ton desi chickpeas, you always keep a space for 500,000 ton chickpeas in Kabuli industry. Thank you for always you are thinking of the Kabuli also to be a part of chickpeas panel.
no, sir, I love Kabul in a way. Actually, like, there is a humongous possibility of increasing those numbers. Right, there. The possibilities are humongous. Desi chickpea to sir, it has become like more of supply and demand, teji mandi. Right, it's become a little bit boring. Chickpea, I see like and it is also having like wider reach, right? In the type of cuisine it is being used, right? It is having a wide reach. So I see the huge potential, and maybe like maybe 5 years, 10 years, 15 years, you never know. After that, when we'll be discussing on similar session, we might be saying 5 million metric tons of Kabuli someday. I see that as a possibility in BG. So Navneet ji, your initial view, because see, I what I do is that I rely 100% on your viewpoint on Kabuli, right? I don't even do research on Kabuli because I know that I'll talk to Navneet ji and I'll get complete picture. And I've been taking that liberty, and thank you for always, right, sounding me up. So sir, Navneet ji, aapke accordingly, what do you see? How is the overall like supply and demand side of Kabuli this year?
So supply, supply is more obviously. If you see the global supply side, if you see the US, Canada, Russia, Argentina, all is come in a good crop in 2025. And even in 2026, when we are expecting crops, it seems like it will come good crops. So overall supply is good. Like if you see Russia is sitting on around 800 to 900,000 tons of supply side. US is sitting on around 350,000 tons. Canada is sitting on around 400,000 tons of the crop. India, we see last year in 2025 around 600,000 tons crop. Mexico is good, around 250,000 tons crop. So overall supply side is good. And that's why we see a correction in the prices globally because the supply is very increased in the last 2024 and 2025. So this is the situation on the supply side. If you see the demands is, it is a product of HoReCa industry. So as the traveling, as the out eatings are going increase, it is it consumed more and more. So this is basically the structure of demands and supply.
No, thanks a lot, sir, for a very detailed number. So when we actually like, coming to again Kabuli chickpeas, do you see any other enhanced demand signal emerging in the market going forward? Like, do you see that there is a potential of new origins or like pushing the Kabuli to new markets where those numbers can increase? Unlike currently, like, we are having that very limit, same origins, same suppliers. How do we increase overall demand of Kabuli in your view, sir?
No, Kabuli, as I said that, okay, the main, it is a cycle. Kabuli always, every commodity is run on the cycle. So let's say if in the prices in 2021, 2022, 2023 is on the higher range, on that time we see many European countries produced more and more, and now they decreased. In 2025, they have decreased the production because now they see that, okay, other countries is growing more, like US, Canada is growing more, Mexico is growing more. So it is a cycle. When we see a increase in the price, the traditional farmers always grow chickpeas, but the new farmers come in and they plant for some areas are diverted. We see many countries like France, Spain, Bulgaria, they start producing. But when they see that their cost of production is the same as they can import, they very fast switch because the crop is not big. I mean, in any country, they can produce 50,000 to 70,000 in European side and all that. But the main producer always there in the market, like Russia, US, Canada. So this is the one side of supply. For the demand, this is a main product of HoReCa Industries. As the people travel, as the people used to eat out, you will see lots of consumption. Just for example, if you see nowadays in any part of India, if you go for 6 days or in any hotel, you can out of 6 days, 3 days, you can find a chickpeas curry, chole ki sabji. So this is the main product of HoReCa Industries, chickpeas. So cafe, restaurants, these people are using in the weddings. In every wedding nowadays there is a one cuisine of this chickpeas. Before the production if we see the consumption in India itself in 2016-17, we are estimating around 250, 300. Now we are estimating around 400,000 tons of domestic consumption in India, and it is all because of HoReCa Industries. In your and my home, when we are sitting in the south of India or the middle of India, central India, we did not make the chickpeas curry in a month. We cannot make in our house, but if we go out, we will have this cuisine everywhere available. So as the HoReCa industry grows, like if you see Dubai is their population is less, but it is a touristic country. UAE is a touristic country. So the consumption is 75,000 tons there because of all the touristic clients there.
Yeah, even hummus, I'm seeing that in all the Indian lounges, airport lounges. Now you'll find it like just a year or year and a half back, hardly people should talk about it. So I think that consumption is also increasing.
Yes.
Sir, also do you see because of the Kabuli being HoReCa, I would say driven commodity, do you see that the caliber size is also there is shift in the caliber size demand, that specifically on a smaller size or a larger size? Do you see that also?
No, I mean, Kabuli is the product or Garbanzo is the product. When you see, then you consume. It is not a lentils, you split it, or it is not a yellow piece, you split. So it is all very much depend on the texture. It is very much depend on the size. It is very much depend on the skin of the Kabuli. So let's say I give you one example. The people, those who are using the American chickpeas, they cannot shift to the Indian or Mexican 9mm because they are ready to pay $300 or more for the same 9mm, but they don't want to change the texture in their restaurants because it is Arabic restaurants. They don't want to change their texture of hummus or texture of falafel or something. So they don't like the people, those who are using the Russian chickpeas as a hummus, they will not change even other products. They can find the substitute. In India also, if you go like in the hotels or the salads, when they are using chickpeas, they always prefer to use big size chickpeas. But if you go in the Delhi side, north side, where they found the chole and kulche hotels, they can only these people can choose some of the small size, little bit change they can according to the price. But the consumption is only seeing of the product, and then only they will consume the cargo.
So here you are saying that actually because of the type of application, it is people are consistent with actually what they want, even if price is a little bit up and down, it doesn't change their buying pattern because their consumers are attuned to that type of taste and texture, so they continue using that origin or as well as same size as well as the
same size.
texture.
Yes. They are very reluctant to change. Like some customer, if you go in especially in the Lebanon cuisine, when they are making the hummus, they want to keep the same chickpeas. If they don't find, they are like restless that, oh, we need that type of chickpeas only. So even for they're ready to pay high prices on that. And also the application, let's say Europe is using the Argentina 7mm, they don't want to replace the with the US 7mm, or they don't want to use the Canadian 7mm. They want to continue with the 7mm for the canning, for their canning in for the Argentina. So they are very reluctant to change because it is again a Horeca product. So Horeca product, it's all appearance. It is sale only on the basis of appearance.
Right. Sir, as you know that the shipping has been going through a lot of, I'll say ups and downs, right? Rather than the just commodity, now the shipping prices, insurance prices, they have become more volatile sometimes than the commodity. Do you see that also impacting in a certain way, like, the price point at different destinations when we are trying to export?
Obviously, the shipping cost has been increased in India post-COVID, but because it is delays are there, but the cost is already increased $30 to $50 a ton, which is for the Horeca product, or which is the product like chickpeas, like a small commodity. I think it cannot be affect too much. So only the transits are big. Let's say if we bring the product from US to Dubai or US to Turkey, or this time these things are affecting, but not prices is okay. I mean, it is not increased too much on the product.
You're very lucky. If you tell this thing to rice trader, he'll say, sir, पैसा logistic में ही बना रहा हूँ, बाकी चावल तो नुकसान में बेच रहा हूँ.
Exactly. So like a 2 containers, 4 containers business. So it doesn't affect too much on that.
Also, are you seeing that actually more trading players coming in the market in India, in Kabuli?
Sorry?
Have the number of traders increased in Kabul in India?
Yes. Because, domestic consumption is increased here. So lots of people now, they are focusing on the export, but now they are focusing on their brand building and supply of the domestic. Because more or less we are estimating every day from Indore, or now because Gujarat is also now a producer and Maharashtra is also now a producer, we are assuming that more or less 1,000 tons every day need for the domestic supply of India. It makes 365,000 tons of the consumption in a year. So we are seeing that yes, the number of traders are increasing in the Kabuli business.
See, initially there was also a lot of talk about change in the import policy in India on that. Do you see that matter is settled? There is no possibilities of any changes on that side?
I mean, India producing sufficient. Like last year, around 600,000 tons. This year also, we are estimating more or less the seeding is less. Let's say 10 to 15%, somewhere 20%. But the yield so far is good. I mean, the crop is looking good because it's still 1.5 months, 2 months in the crop. So we see the same type of production in the Kabulis especially. So I don't think so that that import is needed at this time. We have sufficient crop. We are exporting 150 to 175,000 tons now in a year, and the local consumption. So we are on we are in a very comfortable situation. But yes, I mean, if government is thinking to import Russian chickpeas, it is a good option because Russian chickpeas, especially if they open for the Russian chickpeas, it will be okay. I mean, it is like a same price of the Australian, and in India only you can switch the consumption of this Kabuli in the flour. You can use as a flour also Russian chickpeas. So I think only Russia can be, if import is allowed, it should be only Russia. Rest, I think we have sufficient produce for the Kabuli, I mean, the big size, we have sufficient produce, and we are on a very comfortable side.
No, I totally agree. In fact, there was last year there were talks that actually to allow Kabuli chickpeas, but unfortunately, from the direction it was pushed, government was not very comfortable about the credential of the people giving those numbers. So they were questioning the numbers. Otherwise, actually, I think it could have been a good option. And now coming to last question to you, Navneet ji, you do a global trade. So what are the origins which are most suitable for Mediterranean markets? Whether we talk about Turkey, whether we talk about Middle East, which according to you are the best origins for them?
Yeah, so let's say if I say the Middle East market, the Turkey is the main market, the main junction where re-export junction. So Turkey use lots of Russian chickpeas. They are buying around 200 to 250,000 tons. Last year it is up to 300,000 tons, but it is all go for transit trade. It is go for Iraq. So it is go for the hummus in the Iraq. So and then for the bigger calibers, they use lots of the US chickpeas, Canadian chickpeas, Argentina chickpeas, Indian chickpeas, Mexican chickpeas. So all origin chickpeas depends on the prices and depends on the their consumption practice. They can use from many origins, but the main part, because Russia is the main part, so Russia produced, let's say, 800,000 tons, they supply 250,000 tons to Turkey, 250,000 tons to Pakistan, 100,000 tons to Middle East like Dubai, Jordan, Egypt, and all that. So Russia is the main, in the quantity, if you see, Russia is the main product.
Perfect. Point very well taken. So we are seeing I would say that pretty eventless Kabuli year for 2026, until unless there is some geopolitical or weather-based disruption. Otherwise, everything look pretty smooth.
Yes.
And that would, I would say, that a lot of trading people who think they want to build a little bit more stable business than having stress and eventually high blood pressure in dealing with tuar and in dealing with LOPs and desi chickpea. Look at Kabuli chickpea. It is a little bit, I would say, safer commodity and gives you peace of mind. Thanks a lot, Navneet ji. It's always a pleasure to talk to you and get a 360-degree download of how the Kabuli market is. Thank you, sir.
Thank you, sir. Thank you, sir.
So with that, we move to our next speaker. And again, we are having, I would say, a stalwart, a legend in the market, Mr. Jayesh Patel. He's CEO of Bajrang International Group. Big. So, and he's one of my mentors. Whenever I get confused about policy, when I get confused about how the markets are moving, he's my go-to man. Right. So it's always a pleasure to have you. And let me give you a little bit of introduction, though he doesn't need much of introduction. He is the CEO of big vertical integrated agri conglomerate with a massive footprint across Africa. Since 2009, he has led BIG's expansion into 24 plus factories and 113 plus warehouses, directly engaging with close to 200,000 smallholder farmers in multiple countries, including Mozambique, Tanzania, Zambia, Kenya. He is a specialist in Africa-India trade corridor, focusing on ESG-led value addition at the origin. His expertise lies in transforming traditional trade into sustainable value chains, making him a critical voice on how Africa pulses are becoming vital for not just India, but global food and nutritional security. Welcome, Jayesh Bhai. It's always a pleasure to have you, sir.
Thank you, Deepak Bhai. Thank you very much. Thank you for such a huge introduction of mine. I think I'm not that big as what you speak about.
सर आपकी कंपनी में ही नाम के अंदर बिग है, so you don't have to actually say you are big or not. And but I'll be very frank with you. Like, I engage with a lot of people on a daily basis, but it is rarely it happens that actually you have that level of intellect, right? Where you want to go back again and again and seek insight. Whenever I'm in Dubai, sir, every time I've asked to have a coffee with you or a tea with you, sir. But one of the reason is that actually, like, you are able to download and understand a lot of things. And in fact, I'm pretty, I would say, blessed that your surname, sir, has given me a lot of understanding, right? I don't want to name many, but there are a couple of people who have, like, guided me a lot in this industry. So I'm always thankful to the Patel community. In fact, I'm from Gujarat, so, like, they are Patel Bhai. In fact, my brother-in-law is also Patel. So I love your commodity community, sir. Actually, they have helped me a lot. Now, coming to the, sir, I would say the elephant in the room, sir, Africa. So Tanzania, do you think, like, Tanzania would be producing chickpeas for India this year? How do you see that panning out?
See, I think when you talk of Africa, see, Tanzania is the second largest producer of chickpeas. The first one is Ethiopia, but Ethiopia has a huge domestic consumption as well. So when it comes to the production point of view, the Ethiopia is the largest producer, while the Tanzania is the second largest, which produces around 150 to 200,000 tons of chickpeas in Tanzania. But we do not have any domestic consumption, and therefore we remain the largest exporters of chickpeas from the Tanzania as such. Coming to the 2026, I think the Tanzania will continue to produce the chickpeas, because the last year we do not see that we had a lack of market. There was a substantial demand of Tanzanian chickpeas into the Pakistan, into the UAE, and obviously India was there. We also have an advantage over other producing country like Australia or Russia. We have a duty benefit. We are the part of the least developed LDC countries, so we have a preferential duty, almost zero duty. So we have edged over others. So if you count on every aspect of the growing the chickpeas in Tanzania, we do not see that our traders or our farmers or the supply chain in the Africa, that they get demotivated in any manner. So we shall have a sufficient crop and sufficient production. We don't see that the crop to get doubled overnight, but there will be a consistent growth will be there.
And sir, see, whenever we come to or we talk about Africa, logistics infrastructure has always been a question, right? And that is a narrative being talked about, that the infrastructure in Africa is still not up to the standard. And in fact, we talk about you are having factories in multiple location, warehouse in multiple location. Sir, your perspective, like, and the reason I'm asking you this question is that there is a lot of interest in India where people would love to come and invest in infrastructure, because that is also geopolitical requirement today, that India look towards Africa with, like, I would say, that more optimism as far as investments are concerned. Do you see that actually, like, infrastructure is shaping up well in Africa?
Deepak bhai, to be honest, if you see the scope in Africa in terms of the infrastructure, it has a more scope than the trading actually in the commodity. So if you have to look at on a poor perspective of the business rationale, it makes more sense to invest in infrastructure, because we do not have it. We are the part of the third world countries. Obviously, the confidence of the other countries in Africa is still much lower compared to the other part of the world. Although that slowly, gradually, people have started investing, but we still do not see the large NMC or the individuals are investing from outside into the basic infrastructures, which is like warehousing, cleaning facility, and etc. So there is a huge potentials to invest in the infrastructure as Africa is concerned. Not only on this thing, also like if you look at the port side, we have currently the vessels are waiting for 28 days, 30 days. So even if the large company or the large logistics company also, they do have a potentials to invest in a facility like port facility. Nothing to do with the pulses alone, but in general the things. Obviously, when you talk of the infrastructure also in a moment, Our rail network is almost zero. We do not have a rail network is being there. So the movement we entirely depend on a movement by the trucks only the thing. Obviously, this has become a seasonal requirement. So the truck prices, the transport rate goes up the thing. So every sectors of the supply chain, starting from the small aggregations level, or probably the satellite centers levels, or probably the large warehousing levels, or in terms of the shipping lines of the things, or port sections. There is a huge potentials to invest in Africa.
Sir, again, taking that question forward, when we see that the investment, what would be the best way for, because see, actually, I've been engaging and talking to a lot of, because you know that I try to act as a brand ambassador of Africa wherever I go and speak. I'm having a lot of love for this continent. What would be the best way for example, a corporate based out of India who wants to come to Africa or invest in infrastructure? What would be the best modality? Should it be a JV mode? Should they come as a greenfield project, or should they buy the current asset? How do you think would be the best, I would say, return of investment? Because you have done that multiple times.
I think one of the major gap what I see when I talk to the many people in the thing, the major gap is in a mindset. Africa is not a short-term investment base. And I think the current mindset of the most of the investors, they are looking the horizon of 5 to 7 years. I think then when you have a horizon of about that, you look at the next 10 years or next 50 years from now. I think if you come with the the mindset of that you wanted to be part of the Africa, and if you come with that mindset, perhaps that you will be successful. But if you come with the thing that mindset of 5 years or 7 years, I think the most of the people struggles in that particular point. Now any countries, any part of the world that you go, if you just go and approach just like that on a start buying thing, I think it is more important that we have very diverse culture. It's like India. We have different state has got a different thing. Similarly, in Africa, we have a different culture, we have a different language, different mindset, different politics. Many things are there. So it is important for a person to understand the country-wise, its politics, its dynamics, its potentials, and then invest the thing. So best way to approach would be is to start with the people who has a knowledge in the continent of Africa, and perhaps that will be the best way to begin the investment. And as and when you understand the continent, or as and when you understand the country, you start to scale up your investment.
Perfect. Now, sir, coming to I would say, the most hotly debated aspect of pulses trade, the policy part of it. So you might be aware that in March 2026, both Mozambique and Malawi's MOUs are due to be renewed. And this is where actually, that comes to $1 billion question. While the overall viewpoint within I would say, Indian dispensation is that MOUs doesn't help much, because most of these commodities are as such also an OGL. But when it restrict India's maneuverability, right, in dealing with multiple stakeholders, because within Africa there is a politics, right? If you sign with Mozambique, don't sign with Tanzania, which happened last time, right? Tanzania doesn't become very happy. And if you sign with Tanzania and Mozambique and Malawi, then Kenya would also find themselves to be left out. So that becomes a little bit complex, and the government of India might take, I'm not saying they are already decided, might take a view that actually let's not get into MOU, let's keep the trade open. Do you think such thing would impact overall, I would say, grassroots level engagement with the farming community in Africa?
Well, Deepak Bhai, we are in this trade for almost 30 years plus, 35 years in this trade. We have seen the 30 years without MOU, and we have seen the 5 years with the MOU. So technically, if you ask me, the MOU is a additional layer, or perhaps the complexity into the trade. I think the trade policies should be the fair and open the thing. I think wherever we see a challenges, I think we need to address the challenges as opposed to trying to protect somewhere here the thing. So I would definitely advocate towards the fair trade policy without any restrictions or the barrier. So that is
Yeah, because No, because I totally agree with you. Because see, the mindset which when I'm engaging with stakeholders here, their mindset is that actually, in case we have to do it rather than MOU, we can do a G2G procurement with private parties involved. If I want to buy, for example, 100,000 metric tons of pulses from Tanzania to help their farmer, I would identify a company in Tanzania. Government from Tanzania can take their guarantee. We can take our guarantee from NAFED, and we can do trade bilaterally rather than actually restrict ourselves with the MOUs, because that puts, as I said, it doesn't help anyone, but actually, wali baat hai na, if you do it with one, five people will not be happy with you. You don't do with anyone, nobody would be unhappy with you at least.
I think the what you are trying to do, see, the government has a responsibility to run the country and not the trade. So I would say that the G2G in this one the thing. But where does the government comes into the thing? So what is important in this particular point, that government should identify their role in controlling the inflation. Undue advantage taken by the trade community, the thing, or anyone else. Let's not put the trade community alone, but anyone else of the thing. So I think that is where the government roles are the thing. So I would say the government should secure themselves by having the sufficient buffer stocks in order to control the prices. Other than that, the government should not be the part of the thing. Government should chip in when the prices are falling down. The government should again chip in when the prices are going up. As long as the prices remains within the 5, 10, 15% of the MSP of what the government is thinking, either plus minus, government does not have any role to play in this thing, which is the current state of the pulses market. And I second point which I wanted to say, the thing is that if you try and go of the again going back to the having the MO and other stuff, I think the MO actually it brings the suspicious in the trade. It does not bring the visibility into the trade. I think this is where the entire trade got disturbed, or the supply chain got the disturbed. And the last submission point, which I would say the thing, the India should look at Africa. Does the Africa has got the solutions for pulses for in India? In short term, no. But in long term, definitely, Africa is the only solution for India. And I think if the Indian policies are kept with this aspect of mind, that Africa is the only solutions for pulses for India, then I think the policy should be the fair thing. I think where they try to compromise is this to club the rest of the world along with the Africa. I think that's where the challenges comes.
So, Judge, very interestingly, in fact, you'll be surprised that past nearly 6 months, the government has stopped listening to traders. Government has stopped listening to associations. And believe me, their policy is better than when they were listening to traders. Currently, I think this is the best possible policy you can have, right? You are not having too much of dip. Prices are pretty stable, right? Tuar at 74 desi, I don't think it is a bad price. While MSP is 80, but 74, farmer makes money, right? Currently, the farmer brings at the market. He's getting 74. He wants 80. That is the other thing. But 74, I think Tuar gives good profitability to Indian farmer. At the same time, we are not seeing any uber inflation where, the people start shouting on the televisions that thali se gayab hui dal. थाली में दाल भी है, किसान भी परेशान नहीं है. But at the same, you see that hue and cry, which was there previously, when the trade used to regularly, and government used to listen to trade, right? There used to be meetings regularly. We have seen that the policy used to be chaos. Now, I think, at least policy, we are seeing a little bit of stability. Now, coming to on the policy, the last question to you, sir, as you rightly mentioned that.
I would, Deepak, by slightly different ways. You
Okay.
listen to all and take the decision what is right for the thing. I think the ignoring trade, it would not be appropriate. I think that the trade is the crucial part of your commodity, and you cannot ignore them. I wouldn't recommend even myself to ignore them. But I think that what you have to be there is that you have to listen because every stakeholders, whether it's the traders, consumers, the wholesalers, retailers, growers, or suppliers, you need to listen to all of them, and then probably see that come up with the policy which is a win-win situations for all.
So they are listening. That's what I'm saying. They are not acting. Previously, they used to act immediately if there is a representation, right? In
I
second,
think
third representation.
we'll have a separate conversation for
Yeah.
that.
So
We should
so
add
so
that here.
so they do listen, sir. In fact, like, all the TV debates, they watch very regularly what's happening on different televisions. Now, coming to, sir, the very important and pertinent question, because you have been someone who is engaging directly at the grassroots level, right? You're dealing with the small and marginal farmers. How do you see, like, that when you are working with the farmers, we can further, because for me, farmer, whether he's in India or in Africa, is same. How we can, like, ensure that the farmers in Africa also they get dignity and they get better realization of their produce, because we have seen, like, of late sometime when the brunt of any falling price in India directly gets, like, I would say, pushed to the farmers downline. Even we have seen the TMX prices this year in Tanzania, they literally crashed, like, to the level where it was not viable for farmers, but eventually they recovered. But how do we ensure that we are able to insulate farmers, just not in India, but also in Africa, that they don't end up losing too much of money?
I think this is the $1 million question what you asked me. See what happens. The thing, it is again a mindset. See that if you've been coming from the price range of $1,500, $1,800 of the pulses, and then it comes to the $800 market, you might consider it's a relative terms, as opposed to the if you consider the cost of the production, or probably the cost of other commodity versus the pulses thing. I think the current prices which is there for the pulses, I do not see any demotivations to the farmers. It is a little bit disappointment than the demotivation. It's a disappointment that, okay, previous year you have seen the high price, this year you have not seen the high price. But it is not demotivating at all, because still, if you compare the other crops, like the cotton, tobacco, maize, sunflower, or any other crop, soya, the things, I think the realizations for the farmers is still better or probably equal in the pulses. So I do not see it's a demotivating prices over there. It is just that thing. Secondly, what has happened that because of the various reason, I think as Binod Bhai and the other people had mentioned, that in the yellow peas, I think was the biggest commodity where the industries got heavily, lost in India. And I think that fear actually translated into the other pulses as well. While the other pulses actually had nothing to do with the import of yellow peas as such, the thing. The prices of the $500, $600 pigeon peas is a historic bottom. You have nothing to lose in these things. Unfortunately, most of the MNC was busy in the yellow peas and sorting their lentils issue. They couldn't participate in this trade. So actually, it's an opportunity lost, rather than I would say there was a disappointment as such the thing. So this
I
is
totally,
this
I
was
totally,
this is my submission in terms of the things. And as a company also, we try to see that the African farmers do not have a entirely dependency on India. We try and to do the bit of marketing into the Bangladesh, Pakistan, UAE. So we have our crop size is also small, and then we try to sell the other part of the world as well. We also do a bit of value additions at the origin. We have plant in Mozambique, we have plant in Malawi, we have plant in Tanzania. So we do a bit of value additions, and I think there is a scope to do a value addition in Africa as such.
perfect. So, sir, I totally agree with you. In fact, like, if I have to talk like some of our TV anchor, pili dal se hua pilia, right? That should be the baseline. Sir, how now, like, to wrap it up, sir, how do you see overall pulses trade in 2026? Do you see that it's a safe place to put money, and like, जैसे विनोद भाई बोल रहे थे, invest now, take exit maybe in January, and then again invest and again take exit in May. So do you think, like, this would not be so bad as 24-25 at least?
Okay, Vinod Bhai has just explained the normal the trade historically should behave. The reason why that we have a new crop in January, February, which is coming the thing. So that is where we see that the market will try and figure out what is the prices for the next 2-3 months. When you come to the May, the pressure goes away. All the pressure of chana, pigeon peas goes away, the stuff. Then you see the markets are stable, and then probably you see the price improving the thing. Again, when you come to the September, you see the all arrivals from Africa and everything which is coming down will again bring the pressure into the pulses, the thing, which will continue till the end of December on these things. Then there'll be a short window will be there, which is now, where you say improvement is there. And then again, by the end of January, you see the new crop of India will start talking about the things, and then probably the market will come down the thing. So this is how the trade pattern is being there, supply season behavior is being there. With regards to the prices of the thing, current prices for any pulses, irrespective of the chickpeas or the pigeon peas or the yellow peas or the things, it's at the bottom. I don't think that you should overtrade or you should stay away from the thing. The moment you start entering into the speculations, then you have adverse, or you should be ready for adverse result. It could be the huge benefit to you, or it could be a huge loss to you. But as long as you remain there with the trade, I think you will survive.
Perfect. Very good advice, sir. That be a principle-driven trader, not a rogue trader or a cowboy trader. You'll still make decent money this year. Thanks a lot, Jayesh bhai. It's always a pleasure and a privilege to talk to you. Looking forward to see you soon in Dubai as well, sir. Thank you.
Thank you so much. Thank you.
So now we go to our next speaker, and from predominantly this part of the world where we talk about from Dubai, from India. Let's move a little bit up north. So we are having Mr. Sergey Pluzhnikov. He's a founder of Russia Pulses Analytics. So Sergey is a founder of Russia Pulses Analytics and a leading expert in the Black Sea agri market. With a background as a head of pulses at Temporia Capital, Sergey provides high-level strategic intelligence on Russian pulse production and export strategy. He is go-to authority for understanding the LOP dynamics that have recently disrupted the global trade flows. Sergey specializes in reading the spread between data versus sentiment, offering traders a clear view of quantity and quality of peas, lentils, chickpeas coming all out from Russia and the old CIS countries. Welcome, Sergey. It's a pleasure to have you, sir.
Appreciate Deepak ji. First of all, I wanted to say Namaste, invitation ke liye dhanyavad. Aapke garon mein shanti aur khushhali aaye. Well, I suppose my English a bit better than my Hindi, and I have something to show you just to explain how it works in Russia and how Russian farmers and Russian traders are watching on market nowadays. Right now,
Can you share your screen? Can you share your screen and then go ahead, please? Perfect.
Yeah, it is great.
Yes, it is great. Please go ahead.
Okay, so right now we can tell all of screen is available, right? I'm not sure. Yeah.
Yes,
Okay.
your screen is available. Yeah, it's visible and nice and clear.
So if you are talking about acreage, Russian yellow peas acreage and chickpeas and lentils increased. But the main point I wanted to tell, rain makes grain. So even if in the southern part of Russia we had several problems with yield, and the south of Rostov and the northern part of Krasnodar region had terrible drought, Siberia made very, very good crop of yellow peas, and the central part was good also. Volga region increased chickpea acreage, and the yield was normal. So it was a kind of a decision after medium to bad condition of winter sown wheat. Our farmers decided to sow chickpeas as a common crop in their area. So right now we have a decent and pretty big crop of chickpeas and lentils also. Altai was very aggressive in increasing acreage, and everything gone good. By the way, if we are talking about prices, previous year was the year of falling prices, and that is the problem. Our farmers are living with calculators in their hands, so they need to stimulate it by prices. So they are talking, we are producing pea more than 5 million metric tons. So we need to support, or at least we should have a very active trade and stable demand to cover our supply. That is our farmers and traders waiting for. So even container business was falling. Panamax and handy-sized market were falling also. And right now we're sitting on the edge how we will act and handle such situation in next season. My idea, we need to decrease acreage a bit and to to give some time for prices to rise, because right now our farmers are thinking about acreage shift to oil seeds, and I do believe next year will be oil seed season. If we're talking about Russian yellow pea production by regions, the main region is Stavropol. It has good yield, absolutely normal acreage, but yield was a bit, higher than previous year. Rostov had crop lower, and southern part of Rostov, and the northern part of Krasnodar region, but Siberia and central part of Russia made the main part of the work. By the way, if we are talking where we will send such a big quantities, we can check world pulses trade quantities. And after 2017, when India came out of market, it was a long period of recovery, and right now we are facing the same problem as we saw in 2017, 2018. It is a kind of crisis of overproduction. And right now, people, traders, and farmers all over the world should understand how they will act in new realities. We are checking story of Canadian exports, how they acted, and our own export history of yellow peas. We were concentrated on Turkish market mainly for a long time, while Canada improved their business in India and China also. That's why even after crisis of 2017, 2018, they moved their vessels to China and had no problems in selling their quantities. But right now they see such problems and trying to solve. While Russia increased yellow pea and pulses export from year to year, and in 2023 we reached 3 million tons of exports, and I do believe soon we will reach it again and even overwork it. As I told, rain makes grain, so acreage of Canadian pulses was a bit higher than previous season, but yield made all the main work. If we are talking of peas and lentils, chickpea acreage increased, it is so. But if we are talking about peas and lentils, we may conclude the weather is the main part of production. I saw no oversowing, in acreage in Canada and in Russia also. Only weather helped world to make such supply. And by the way, if we are talking about our exports, I suppose it is slower than previous year. But the same situation we may see in Canada. I am talking about Canada, about Australia, about our main buyers, because our competitors and our main consumers and our buyers to check situation day by day to understand where we were wrong or where we acted too fast and acted not in the right way, or maybe we made good decision. So if you are talking about Canada, things go lower and slower, I mean in export pace than previous season. In yellow pea, they reached dynamics of 2023-2024 season, and prices fell day by day from the beginning of the season. I listened to very good interview. As far as I remember, it was Trent Klarenbach, and Dave told previous season I drank coffee and I understood what will be my crop acreage and crop rotations for next season. Right now I am sitting and I cannot decide for sure what I will produce for next year. And I can understand him, because if we are talking about supply and demand of yellow pea in Canada, they will be full of stocks for next season, and to overproduce or produce the same quantity will save the situation is the same in the same tempo. I mean, Canada has no such opportunity to use yellow pea inside of country, but we can, because in Russia we are using 2.3 million metric tons of yellow pea for our own consumption. I mean, for forage purposes, for animal feed and other. So even situation with overproduction in Russia looks not catastrophic, but we are watching day by day and understand that world balance is broken right now. And by the way, it is broken with a huge amount of Australian daisy. We are talking about daisy, about lentils, and even chickpea, because it is, I mean, yellow pea is substitute for daisy, and that's why this market are pretty close. They are not acting in the same way, and not always they are acting in a such way. But we should always keep in mind, if market is full of daisy, we will have some problem with selling our yellow pea. And by the way, we are facing such problem right now. If we are watching on prices to Kolkata, to Navasheva from our brokers, right now we even have no demand. Nobody is asking, and we're selling to China because it is a pretty stable and active market. And as we see in dynamics of Indian imports of pulses, it is much slower than in previous year. And from to the other side, supply part is much higher than in previous season. And if we are talking about stocks in India, it is also decent. So we were facing overproduction in any main center of production of pulses. And right now we will check how we will handle it, and that's why any of buyers should understand, if overpress the price, producer will stop producing, and we will be back to 2014. And if El Nino will help, I mean, help prices and crush production in southern hemisphere, we can meet the situation of 2023, when Canada had problems with supply and only Russian overproduction. We thought that yeah, that was overproduction, but it was just a good, decent crop. So we saved world balance, but in this season nobody and no one helped us to sell it. And by the way, if we are talking about main buyers, how prices in China acted after 20th of March, when duty for Canadian YP was made, internal prices jumped but our selling prices, CIF prices, had no change and even went lower. If we are talking about dynamics of imports of China, it is much slower than in 2023-2024 season, but a bit better than in previous year. So we watch it and we see it in our selling dynamics. But we do understand after December shipments, trade will be slower, and we will check opportunities to sell to any destination. You asked, will Russia have a problem to cover demand of India and China? I am sure it is not a problem to cover any of demand, and that is our main point, to show that Russian supply is stable, normal, and predictable, and we will not choose and prefer one to another and play such games. We will sell to India or to Turkey or to other. We have plenty of stocks to cover all of needs. And that is our idea, because if we are talking about human food, human consumption, if we are talking about price stability, and if we are talking about children and elder people to diversify their rations, we shouldn't play games in such scene. If we are talking about it is import of India from the left side of Daisy, and for the right side it is import of lentils by season. So we see India pretty stable and in a low pace, and prefer not to overbuy or oversupply, and that is a problem. Not that is a problem, that is a problem of the market. Everybody plays too accurate to be on a safe side. None of our traders are gonna go long in stocks of, as example, yellow pea, because when you see a falling market day by day in a previous year, you are not so active to buy, and you are not so optimistic that your bet will work in next year. And if we are talking about Indian Rabi progress, we also see no problem on the supply and demand side. That's why we're very accurate with our trade, and it is back-to-back only. It should be very stable market, but not a gambling one. That is the idea I wanted to tell you. Excuse me if something was wrong, and I suppose it may be interesting for you.
No, excellent presentation. Really loved it. In fact, you have covered so many important points. And Sergey, one of the, I would say, very rarely you see such a holistic view of it, and your deep insights, very helpful. Now, while we have covered in bits and pieces, I would like to direct some questions so that, our audience have a little bit of more clarity. Now, I totally agree with you that Russia is having options. It can export yellow peas to China, which it is already doing. In fact, it is the only large dominant player to export for China. And while you said that 2023 and 25, there was a dip because we know that US restricted the export of whey protein from China to US, and suddenly that production facility which was consuming yellow peas, it dried off overnight. So I think that was one of the reasons dip. But at the same time, Canada is only having one market, India. So definitely Russia is having that upper edge. So do you see in this scenario, Russia would rather be less aggressive and wait till maybe February, March, April to see that actually price realization is better, and then they can enter in the market where actually already you have seen that the market has improved. And second, also I would like your indulgence on the fact that if you see in last January, ruble to US dollar was something around 100 and it is now at something around 79. So there has been a strengthening of ruble, but at the same time, INR, right, from 85 it has went to 90. So there is a weakening of INR. So that also create a little bit of, I would say that the currency arbitrage also, that the imports become costlier from Russia vis-a-vis Canada. In these dynamics, do you see that Russia would continue looking Indian as one of the, I would say, important option rather than say that, okay, fine, let's focus more on the European Union, let's focus more on Black Sea, and then actually China, India could be something they take care of their own. So do you see that that could be a possibility?
Well, if price will rise, it will be great because our farmers should have sight or kind of idea that price will be decent. In March, they will in February, March, they will plan their crop rotation, and right now their idea is to decrease pulses. If nobody wants it, farmers are always telling only black and white option. They're telling nobody needs chickpeas now, nobody needs yellow peas. So if they don't need, we will not produce. But a year ago, when price will be 29,000 rubles, everybody liked peas and chickpeas also. That's why I am talking. It will be a good idea to show our farmers and our traders that market need yellow peas. We have plenty of stocks. We are not overstocked, and I think we should improve our Indian activity. Selling and export business. But right now, as far as I heard in the market, India prefer Canadian yellow peas. By the way, 2 years ago, as far as I remember, Bimal Qatari was our big guest in Sochi conference of Grain Union of Russia and Agri-Ministry held this conference, and he told it was a big pause of imports of yellow pea, and after 4 or 5 years import proceeds, we face situation when quality of Russian yellow peas much better than in 2017. I am talking not about price but about quality also. For sure, Canadian quality is brilliant. It is so. It is brand, but we made huge step to play maybe close to the same role of quality and quantity. That's why I'm talking. For sure, we will do our best to cover Indian needs in pulses and in yellow peas as a market, as a crop. It is even not niche right now. It is real commodities. Now, for 10 years ago, nobody in Russia thought that we will be producers of yellow peas #1 in the world. And right now, I'm telling about we should cover and Indian and Bangladesh and Pakistan and Chinese needs. We should hold strong in Turkish market, and for sure our idea, our goal to cover all of market and show whenever it can be in the world, whenever price it will be, any political issues, people will have their pulses, their Russian pulses on their tables, and we should show it. I think if a price will rise in a spring, it will be a very good idea for our farmers, at least to hold the same level of production. We need price support right now.
Perfect. No, I totally agree with you, Sergey. Russia is having that, I would say, best sweet spot. Irrespective of geopolitics, you are having multiple markets to tap into. At the same time, I agree, farmer in Russia, they don't like that too much dip in the prices. They go ahead with the commodity which they believe is going to be giving them stable market and stable price. I would also like to understand from you, how is the dynamics of the logistic and the insurance premium, right? Adding up the cost, whether it is pulses or any other commodity. Do you see that the logistics challenges are also there when we talk about the Black Sea at least?
Yeah, definitely. If we're talking about container market, freight is much higher, and not all of lines are available right now in Russia. But as I see, from 2014, when I appeared on the market and were in Grain Rus company, became exporters from top 10 of chickpeas from Russia. Market was practically 50-50, bulk 3.5 kmt vessels to Turkey, and to India and Pakistan we shipped containers only. Right now we have paradigm shift, and we see that 25, 50 kmt vessels is the main player here. That's why I am talking the problem of Russian Black Sea. It should be very active in the beginning of the season, and after ice is coming and winds are blowing too hard. Loading on the Port Kavkaz became pretty complicated, and it should have a much higher level of freight. Freight rate. That's why I'm talking. Freight became much higher. Our currency rate playing own role. So we should have some stock in margin, and that is a great problem. But as I see, the biggest problem is on the demand side. If you was absolutely right when you told, if we are thinking as farmers, and to the opposite side, if we are thinking as our buyers and consumers in India or China, if there is plenty of yellow peas in the world, what is the hurry? We may buy small quantities every day. Pulses are everywhere, so we shouldn't play on the Russian farmers' side. But if we're going play along, you should help us to improve average. It is not freight is not a bigger problem, not the biggest problem of trading of this year. I wanted to mention.
No, surely, for sure, India is very keen to work with Russia. We have been old partners for, I would say, past multiple decades. So definitely there is interest. Now, I would also like to touch upon a very small point here, just your views. Is this ruble yuan trade happening between China and Russia? Because that also gives an added advantage, because India used to do ruble INR trade. But our surplus has already is gone, so there has to be more mechanism. But are you already the pulses traders when they're dealing with China, so the trade is happening in yuan?
In yuan or USD, vice versa, not a problem. All Siberia is trading in yuan. All Siberia. And trade of southern ports, sometimes it is in USD, sometimes in yuan. Most of trade in yuan, but we are acting in USD also. And I can say ruble is very strong right now. And for exporters, it is not a very good level. And even in USD, margin is the same. We are living in reality, in ruble reality. So
Right.
that's why we are facing some problems with currency level rate.
Yeah, it's a good problem to have. If your currency becomes strong, it's a good problem to have as a country for sure. Maybe not as a trader. Now, coming to last question from you, like, you talked a little bit about improvement in quality of yellow peas in Russia because 2017, 18, 19. So the market is not much aware that the quality improvement has happened. So are there any initiative to, like, put it across, whether in platforms like Gulf Food or India Food Summit and conferences, that actually, like, the quality of Russian yellow peas has become at par with Canada, or maybe, like, very close to that. So are there initiative being done by the trade bodies, the traders, or the government to, like, put that point? Because in India, generally the mindset is that Canadian is a gold standard, then comes Russia. And that is also sometimes lead to, like, lower allocation of the prices to Russian yellow peas. But I believe that should change if the quality is, because in fact, you'll be surprised. I had few samples and I was really amazed by the samples I've seen, and the quality, even the protein content in them were at par at, like, with Canada. But do you see that some effort, like, in making the end user or the buyers aware about the quality?
Definitely. We see such problem at the and as we're understanding now, the biggest problem of Russian wealth is unpredictability. So, like Azan Asturk told, it is a surprise, and sometimes it is a very good surprise. And I am opening container and found out quality is much better than I paid for. So I could sell and earn much more than I will do right now, because I have already sold it to Turkey. I think we should improve our quality for sure, but we will improve it to have a Canadian price. The problem is market already has Canadian price, so it will be a long story, and year by year we will improve quality. But if we're talking about pulses factory cleaning, it costs money, it costs funds, and that's why price of Russian yellow pea will improve also. So we have no option to make Canadian quality and sell it in Russian price. That's what I'm talking about. So we should move to price increasing. If market wants it, market should tell, guys, we need Sortex quality. All around the world, if we are talking about Chinese factories of starch and protein factories, need extra clean yellow peas, and we are consuming extra clean yellow peas also. So let's move to Sortex. But sometimes people want only Sortex quality, and sometimes buyers talking only about price, and it is price sensitive, and we should make farm addressed price. Well, we can do and farm addressed price. We can make with Navneet. We sold a lot of Sortex to Saudi Arabia. He is just a golden trader. And I wanted to match one point. We can do extra quality. We may do FD price, but it will never be in the same time. And if market is ready to clean it by themselves, we can produce the FD quality and ship. If market is ready for premium, just tell us. Just change standards of purchasing, the standard quality of contracts. We will move to it, and it will be great.
Perfect. Thanks a lot. Indeed, a very excellent discussion. And Sergey, thanks a lot for bringing it on the table. Now we would like to move to our next speaker. And now let's go to one of the destinations, which also was discussed and talked about by Sergey and other speakers, Pakistan. So I'm having with me Mr. Maisam Ali. He's a global supply chain analyst at GPC, that is Global Pulses Confederation, where his work centers on improving the transparency and information flow across the global pulses industry. He's closely involved in tracking market developments, trade dynamics, and policy-related changes affecting the pulse producing and importing countries, and in ensuring that the pulses community remains informed and connected. Through collaborations with government, trade association, and industry stakeholders, his role supports GPC's broader mission of strengthening the global pulses supply chain and advancing sustainable growth in pulses consumption worldwide. Welcome, Maisam. How are you?
Thank you very much, Deepak Saab. Kaise hain? How are you?
All good. God has been kind. इनायत है ऊपर वाले की. Thank you. Let me go straight away to the question to you. So I would like to understand the overall the demand perspective of Pakistan, and I think you're having some slides. So why don't you just go through it and explain our audience, right,
Yes.
what to look at Pakistan?
Yes, let's go directly to it. Can you see my screen?
Yes.
Okay, so this data is the source is the Pulse Atlas, which is the global demand and supply database for the pulse industry. This data is for Pakistan's desi chickpeas. You can see that the import trend is on the left top side. In 2025, we closed the year with 407,000 tons of imports, and majority of it came from Australia. You can see 93% came from Australia, 27% came from Tanzania. At the moment in Pakistan, what we're seeing is that there's a lot of desi chickpeas coming in. There was some, you can see in December over here in the top right chart. In December, there was 60,000 tons that came in. We have another 2 vessels that are ready right now for offloading. So that's about another 60,000 tons. So in Pakistan, we're seeing a lot of stock coming in of desi chickpeas. And I would say that we are between well stocked to overstocked. We're somewhere in between there. So we should be okay until our crop comes in April after Ramzan. And if you ask me about Ramzan, exactly how we are prepared for that, I think we're okay. We have these stocks coming in. We have stocks, we're well supplied, and March, April, May, jaise the local crop will start coming, so we should be well stocked even after that. And yeah, so that is the current scenario in Pakistan. I think.
Sorry, I was on mute. My apologies.
No
Yeah.
worries.
Yeah. So no, I understand, Pakistan is pretty well stocked, and things look pretty, I would say, decent, at least
Yeah.
in current market.
Yeah.
But at the same time, I would like to understand a little bit about, are there challenges about the currency fluctuation as well as payments? Because those has been some of the stories, right? And we generally hear story from everybody except from people in Pakistan. So I thought you'll be the best person to alleviate any of those doubt in case people think that those challenges are still there, because I think things have improved substantially when they used to be few months back. Am I
Yeah.
reading right?
बिल्कुल ऐसा ही है, sir. Look, at the end of the day, I'm sure you'll agree, everyone will agree. It all depends on who you're trading with. You need to be very careful in your due diligence. You can't just proceed with anyone. So as long as you're doing your due diligence, you should be okay. The payments are going through. I haven't heard of any issues recently. The bank takes about 2 to 3 days to process, and they understand that this is an essential commodity, so they don't hold it very much. As far as the foreign exchange, if you talk about that, then we've been between 278 to 280, 281. It's not that much. The trades are happening. So yeah, the payments are going through. Exchange rates are okay.
Now, one more question that actually, because the currency is, in fact, that is happening with multiple countries in Southeast
Yeah.
Asia, the
Yeah.
weakening of currency against the dollars. And
Yeah.
then even like Sergey was talking about, like, when there is a strengthening of a currency at the origin. So do you see that actually, like, with the weakness of the currency, the demand can also get impacted because of that going forward? Because imports becomes costlier for the domestic consumption?
So right now, based on what I'm hearing, people are already suffering losses in the local market. And if you ask me, in the near term, we might see imports slow down a bit for the next, at least maybe April, May. I think that things should logically slow down. Obviously, we can't exactly understand the psychology behind the traders, and we can't stop anyone from doing business, but logically, they should slow down because people are incurring losses. So if you ask me, in the near term, whatever happens from the origin side, we are well stocked. The prices for at which the stock is coming is higher than the local market. So people are just suffering losses. So I don't think that the exchange rate right now is playing a lot of part. I think we just need to wait a little for the stocks to be absorbed locally, and then we will see what happens. Maybe April, May onwards.
Right. And see, actually, Australia has been a big supplier to Pakistan of late when
Yes.
it comes to Sudesi chickpea.
Yes.
And things doesn't look very encouraging in India for the prospect of, like, this huge crop they're having to be liquidated in India.
Yeah.
Eventually, if you see that going forward, there could be a more weakness in Australian prices.
Yeah.
Because Pakistan becomes the only option, or because, as I said, like, India is having its own limitation. We'd be hardly doing 0.65 million metric tons, unlike
Yeah.
close to 1.5 we did last year. And unfortunately, when India recedes the market, like, because of the size of our population, right, that numbers become really huge. And
Yeah.
this is where do you think, like, that there, because while majority of our speaker have been upbeat about the bottom, I still have a apprehension, like, on CIF basis, that actually still we might be a little bit far off from the bottom. Do you think that could be a possibility?
Sir, based on what I'm hearing, every time you hit a bottom, there's a new bottom. Every time someone thinks they've hit a bottom, there's a new bottom. So that's that. Like I said, people are making losses. How do they make losses? They think you've hit the bottom, so they conduct a trade. And then by the time the stock comes, there's a new bottom, and then the cycle keeps repeating. So I if the price, so right now the local market levels are about 152 rupees, which equates to about $485, $490 ke kareeb. In order to even break even, the prices would have to be about 160 or something. So that would equal about, according to the prices right now, that equals about 520, 525.
But Masim,
So
I think you also have duties, right? You're having 10% or odd duties on chickpea in Pakistan. If I'm
no, we
not,
don't have,
no,
no,
you
no, we
don't
don't.
have.
No, we
Okay,
don't.
okay,
So I already, in my calculation, I took in land and cost.
right.
So yeah, in order to break even the prices would have to be at least 160. Right now they're about 152, 150, like that. So I think that if you ask me strategically, this is the ideal time for Pakistani importers to develop strategic buffers, because Australia has a lot of stock. There are not a lot of importers who can import crazy amounts in the market. India has duty. I think this is the ideal time for Pakistan. I think it cannot get better than this, to start having strategic buffer stocks for the future, to secure good positions. I think this is the ideal time, because I don't think it can go very much lower than it is right now. It will go up at some point, but obviously you need to have the capacity to be able to hold stock. So yeah, maybe let it play out until April, May, and then start thinking, if you can hold buffer stocks, hold buffer stocks. I think this is the time.
Perfect. No, I totally agree with you. Like, for whole of South Asia, this could be good time for governments to private trade to hold buffers in multiple commodity because pulses has been, I would say that pretty low, right?
Yeah.
And then actually for when you're having 2 or 2.5 years of downward trends, the upward trends is around the corner. When it is going to happen, and then we are also hearing about El Nino and all that also, the climate picture coming in. And you know that India and Pakistan both are very much vulnerable to monsoons, right?
SA,
We have seen that happening in wheat, rice, right? Pakistan had a problem, India had a problem. So again, what I'm saying that this could be the right advice to you. Now the last question to you, like, do you see, like, other than Australia, you also import a lot from Tanzania. So is it also a possibility that actually, like, there could be a thought process that we are stocked till pretty much like, April. Let's wait a little bit and then see what's happened in Tanzania.
Can you rephrase? I didn't understand exactly.
So Tanzania comes later, right? So
Yeah,
Australia is here, and
Yeah.
You already have pretty decent stocked up, right? For
Yes.
next, I would say till at least April or May.
Yeah.
And this is where actually, like, you might be looking at August, mid of August, like, Africa getting into it. So
Yeah.
do you think, like, there could be a possibility where sometime you over optimize and say that, hey, let's wait. Maybe we might get a, I would say, jackpot in Tanzania, and then let's see, like, what Australia, let it be where it is.
So I think that if you look at the prices over the last month or two, Tanzania's desi chickpeas have been higher than Australia. So it hasn't exactly been up to CNF Karachi. So it hasn't exactly really been an opportunity type thing. It just depends on what you need and what your position is. If you need it urgently, you get it. If it is not needed urgently, you wait for the Australian crop. So it depends on your position and the deals that you have, the customers that you have. It's difficult to say if it's going to be an opportunity or not. It's very subjective from player to player. So yeah, it is an opportunity, of course, because it comes right before the Australian crop, but it was higher in price. And you know that the Australian crop starts trading, forward trades start happening. There's a lot of speculation. And GPC doesn't support speculation. I know you are also always against speculation. So,
In fact, I'll be frank with you. I hate this unofficial forward trade, right? If the government put or regulatory mechanism is there to put some exchange, I'm all for it. We should have forward exchange. But this unregulated business of forwards, right?
Yes.
I think it is nothing but actually, like, it is bad for everyone.
Yes, I agree, sir. I agree. It is, you cannot predict what's going to happen, and this is what has resulted in a lot of losses for many people. So yeah, and to answer your question, in short, Tanzania's cost was higher than Australia's. So it depends from position to position, player to player, what their position is, who their customer is. So if they need it, they urgently import. If they don't need it, better to wait. If you're looking for a lower price, if you have a customer that specifically wants a Tanzanian variety, that's different. So yeah, that's a scenario for us.
Excellent, Maisam. Thanks a lot, and I appreciate your participation. And thank you, GPC, for sharing the Pulse Atlas data. And looking forward to have more collaboration and engagement. Thank you.
Thank you very much, Deepak Bhai. Thank you for having me. Thank you.
Perfect. So now we go to our last speaker, and I would again say that Deepak Rawat ji, he is director trade at Empros International. He has been always supportive of our initiative, and it is so heartening to see that actually I think it should be something around 6 a.m. in Canada, and he's joining us at such a odd time. But he has always been a supportive person, and it's always a pleasure to hear his insight. His analysis is very deep rooted and very structured. The best thing is that actually he's having a global overview of every small, I would say, event happening in any part of the world. So that's very important. So if I have to introduce him, he's a seasoned agri-trade professional with 15 plus years of experience and currently serves as a director trade at Empros International in Canada. A globally recognized expert, he chairs the Pulses Atlas Committee at the Global Pulses Confederation and also serves as the board of director at CPSC, that is Canadian Pulses and Special Crop. He has a diverse background in developing trade flows from Black Sea, Canada, and Australia. He specializes in managing complex trade books and spearhead the development of new products in the pulses and oilseed sector. His dual perspective as a Canadian national with deep Indian market roots makes him a premier voice on the global pulses arbitrage. Thanks a lot, Deepak bhai. It's always a pleasure to have you.
Thank you, Deepak ji. So good morning, good afternoon, and good evening. I don't know wherever people are from. So thank you so much. As you said, I believe you justify your name more than anybody else. Your name says Deepak, and Deepak means light. You are the light of our industry, especially the pulses industry. With the topics, with the voice you are creating. So thank you, Deepak ji. Thank you for inviting me. Always pleasure to come to this forum.
Thanks a lot for your kind word. So Deepak ji, getting into the discussion, we had a discussion, on multiple origins, multiple destinations. Canada plays a very important role when it comes to, supplying pulses to India. I would like your overview, uninterrupted overview. I won't be asking any question, just your chain of thoughts, because we love listening to what you say, both on yellow peas as well as lentils. How do you see the markets are shaping up? What are the situation there? How do you see on the price, origins, whatever you want to cover, right? I would say a commentary both on yellow peas and lentils. Over to you.
So Deepak ji, first of all, let us start one by one. So let me start with yellow peas first. So this year, Canada has seen unprecedented yields. So when we talk about peas here in Canada this year, the area was only 9 to 10% increased. But then when you look at the yields, they were almost like 25% more. So in general, we had seen a production of close to 30% more production. The yields of, just to give an idea, because here we talk about acres, people will understand more about the hectares. So a yield of about 2.9 tons per hectare, I mean, Canada has not seen in last 8 to 10 years. So you can imagine, the type of production they have. That was mostly because of the benign weather. Canada was, they had very favorable weather this year. So yellow peas, of course, they have produced a lot. Now, when we look at, what was the carry? So carry was about 450,000 tons from the last year. And this year we are talking about a production of, I'm talking about only yellow peas, something close to 3 to 3.1 million tons. So we are talking about stocks or supplies of about 3.5 million tons of only yellow peas in Canada. So when you look at the size, this is humongous. So production wise, supplies wise, there is no problem. When we look at the demand side, so China has been a big buyer of Canadian yellow peas. Now, this year, especially, because they imposed 100% duties on Canadian peas, so China has been on the backside. They're more, this year they're more turning towards Russia because of these duties. So China is not present in their, with a scheme of things this year. Because last year, if I tell you, China bought somewhere close to 800,000 tons of Canadian peas. So this year, probably they might import only 300,000 tons. China is still importing. But when we look at, so there will be a gap of 500,000 tons, which needs to be filled. Now, on the other side, when we look at the supplies are huge. Like, as I said, 30%. So almost like a million ton or 950,000 tons of more production, which means on one side, your one big buyer is not in the market, and on the other side, you have a huge production. So there is no doubt about this, that we have a huge production this year. Now, so far, India has been a buyer of Canadian peas. If China does not come to the Canadian market, or if India slows down, then definitely we are going to see some issues in Canadian peas market. Now, when we talk about the prices, like I was hearing to a lot of experts, and everybody is of the opinion that in general the pulses prices currently is either at the bottom or very in the narrow band of bottom range. A price of 300 to 320 SIF of yellow peas, I believe for any destination is a fantastic price. We have not seen these type of prices, and if you are getting Canadian product around 310, 315, it's again a very good number for Indian market. When you look at this, sir, you go 2 months, 2 months prior, you will see there was no duty in yellow peas in India, and now we have 30% duty in India. So when there was no duty, the prices of even 30 rupees like was not even achievable. But now a price closer to 40 rupees. So of course, there is the price has increased after the duty, but on the other side, there is more confidence in importers, in buyers, because they have a clarity from the government that okay, there has to be a duty of this much. On the other side, coming back to that a little bit on the Indian side, although I'm not an expert on Indian peas, but what I heard is this year, Indian peas production, especially the yellow peas, would be somewhere close to 500 to 600,000 tons. So they don't have a very big crop. They have a very nominal crop of yellow peas. This was in general. Now, how do I see that, you know, what Canada
Deepak ji,
is
just one small intervention. My apologies. We are looking at Indian crop of not more than 350,000 metric tons, sir.
350?
That's all. It's not even 500,000.
So basically, so you know that basically again further endorses the
And
fact.
again, I would say this is based on my own eyes on the field, talking in UP, right, in Kanpur belt, right?
Yeah.
People might say whatever number, it's not more than 350,000 metric tons. So there is, because farmers were not interested. They were ready to be like, you know, their field to be grazed by animals rather than growing yellow peas. They suffered humongously for 2 years. Yeah, please continue.
So coming back to your point, sir, when you say it's 350,000 tons, so if I was considering 500,000 tons, so you see another 150,000 tons of that demand most likely will be fulfilled from the Canadian piece. Now, how do we see the situation from here? As we all are witnessing that, you know, in last I would say couple of weeks, Indian market has firmed up. Like whether we talk about chickpeas, we talk about yellow peas, we talk about tuar, urad, anything. So this is I would say this is a renewed confidence in Indian market, especially when it comes to pulses. I'm not going to say that what is the reason for this, but it seems that, you know, there is a gap, you know, because the consumption is there and, you know, the stocks are not there. So this is the main, like, you know, the main fundamentals of supply and demand. So supplies are less. Now the question is how we are going to go forward from here. What I see here is, you know, as I said, like, you know, Canadian peas, the quality of Canadian peas around 300, you know, this is a price where India can, this price can sustain for the whole year. Now, the question is what Desi is going to do, what Tuar is going to do, what, like, how these crops are. As long as they remain firm, as long as there is demand from India, I think Canadian peas will keep on, you know, going to India around the same level prices. When we talk about the prices in Canada, right now we are talking about something close to, like, when we dissect this number of 310 or 320 SIF, we talk about a FOB number of something close to 250 to 250 to 260 in bulk boats, which clearly, like, you know, so here, you know, it's a very narrow range, like, which is in Canadian terms we talk about, you know, closer to $7 a bushel, like, you know, here we talk about from the farmer side. This is a number where farmers are not very comfortable because they have not seen these numbers in last few years. They used to sell at much higher prices, but still, like, you know, it's not that they are making losses. They are still making profits. Now the question is, well, what do we see here? But anything below this, because, you know, if it slides another, you know, downside, like maybe 10, $20, I don't think, you know, the farmers are ready to sell. Of course, there is a huge, you know, production this year. If we go with an average of last 5 years, we talk about Canada usually exports about 2.2 to 2.5 million tons of peas a year. So right now it looks on track, provided there is a demand from India, there is demand from other places. Deepakji, I would like to add one more point here. When we talk about the demand or the destinations for Canadian peas, what I've seen is Bangladesh has become a savior this year. Bangladesh is a market, I think, after India, they're the largest, forget China, but apart from China and India, Bangladesh is the third largest importer of peas. They import close to 600,000 tons a year. And now this year, they used to import about 150 to 200,000 tons in containers, which is not happening this year. Mainly because when you have Canadian prices around 320 levels or 325 levels into Bangladesh market, They're not looking at containers because you cannot find these prices in containers, not even from Russia, not even from Ukraine. So basically, even Canada is competing in terms of prices with Black Sea market. So, so you're getting a price which is already discounted, plus you're getting a decent quality. So Bangladesh can add up to at least 300 to 400,000 tons, maybe an additional 200,000 tons. So these things will keep the prices in balance in Canada. What I believe is there is a farm show in Saskatoon in Canada. So we call it Prairies, somewhere around 15th or 16th of January. We will have more ideas from the farmers how they see. But before going into the new crop plantings in the month of March or April, they will definitely would like to reduce the acreage this year. But here we cannot expect a huge shift, probably 5 to 10%. So maybe another 500,000 to 600,000 tons of yellow peas could be, the production could be less. And then it depends on the yields also. As I said, the yields of close to 2.9 tons in hectare. It's humongous. Like, I think it's the, you don't see these type of yields anywhere in yellow peas. So in March, April, if India does not buy, we might see a small downside in terms of prices. Otherwise, I believe they are comfortable with the current supplies and the stocks. We believe that the carry should end up around 800 to maybe 900,000 tons. That will be again huge, but that we are talking about the next year. This year, the price range I would say should be around 300 to 320 at least for next 2 3 months. And then after that, it depends on Indian demand, and then what the farmers are planning here. If they cut down on the acreages, then we might not see any downside. Rather, the prices can increase here. So this is in
Deepak
short about how we.
I need your little bit of indulgence on one more topic. We are seeing that pigeon pea production in India would be lower by at least 300 to 400,000 metric ton this year. If you have to add that also in your calculations, right? And you know that actually, we will be having Feb, March, April, May is a time where actually, the pigeon pea would be in the market. Do you add in that also in dynamics? Do you see that this is the best time to stock and buffer yellow peas?
Sir, as I said, there are two factors right now for Canadian prices. Number one, of course, the demand from India, Bangladesh. These are the major markets in absence of China. But if China comes back, because if China, so it's a game of ifs and buts. There is a lot of pressure on the government to have a dialogue with the Chinese government, and to somehow reduce these duties, which can happen. But because once it happens, then definitely these prices can jump by $40 to $50 a ton. But right now, China is able to manage their requirements or imports of yellow peas without Canada for last few months. So I don't see that happening for next 2 months. So for next 2 months, I believe it's more or less, within the similar range. But we cannot expect a huge drop from here. Maybe another $10 from here. I don't expect, much drop. But as you said, if India comes back, if India is suffering on, production of pigeon peas or other crops, and if India is in the market, then definitely there is hardly any downside. It's more upside. I don't know the upside. It could be $30, it could be $40. We can't expect a huge upside because of the great supplies this year. So it will be a very range bound price of yellow peas this year. This is in nutshell, what I know about yellow peas. And if you allow me, then I would like to move towards lentils.
Just a couple of questions on the yellow peas, and then we
Yes.
move to lentils. Overall, if I have to ask you how to trade, right? Assuming China doesn't happen for time
Yes.
being, assuming that India's pigeon pea supply would be shorter, assuming that Africa will not be growing sufficient amount of pigeon pea, what it did previously because of the crashes which happened in the last season, PNP was like, taken to the cleaners, that in Tanzania, Mozambique. In fact, still there is a lot of African cargo, but there is no takers. So it's a $1 million question whether the traders and the farmers in Africa, they would be so upbeat. So I see like, at least from 1.2 million metric tons coming from Africa, it might be of close to like, 0.8 or best case scenario, maybe a million ton. So you see like, at least 200 to 300 thousand tons evaporating from Africa, another 300 to 400,000 tons evaporating from India's own production. So you see a shortfall of 500,000 metric ton of PGNP. Based on this, what do you see would be like, the possibilities?
Sir, so Deepak ji, you might have seen when we talk about yellow peas, the trade has shifted from containers to mostly the bulk side of it. You don't see, so there is no parity in containers, but there is a good parity in bulk vessel. Like when we talk about containers, because of the freight differential about 35 to 40. What I believe is with your insights and information on the shortage in production in India, especially on pulses, I believe the price will be, this is as everybody is saying, this price is more or less, either the bottom has bottomed out, because when we talk about $250 price, on FOB, this is almost like a feed price, sir. You're getting food yellow peas at the cost of feed price. I don't think it will drop further from here. Now, on the other side, let me give you another factor. When we look at the statistics, how much Canada has exported this year? They have exported, like, by October, by StatScan numbers, we can say that, by October, they exported close to 850,000 tons. But when you look at the commercial inventories, the farmers have delivered to the commercial inventories 1.3 million tons of peas, and I would say about 1.1 million ton of yellow peas has been moved out. So we are talking somewhere close to 35% of the supplies have already, farmers have sold, or, given it to the traders or exporters. So it's not like, huge. Now we still have at least 7 more months to go before the new crop arrives. 7 more months. So more than half year. So, and the farmers here are not like, they're pretty rich and, good supported by, with the government schemes and other things. They can hold on to the prices. So this is the point I'm just trying to make, that, a downside from here, looks very, very rare. Maybe 290, 295. I don't see anything going down, from this level. But from 320 to 350 looks a more possibility. And the reason is, as you said, some demand expected from India. If China comes, then the price will be 375, 380, sir, minimum. Because China
Right.
is like, once they come, they buy a single boat of 60,000 tons. So they can bring another dimension to the market. As I said, Bangladesh, you see this year, because when you get the cargo at 320, 325, why would you import something at 360, either from Black Sea or from somewhere else? So that is also going to support, Canadian prices. This is, so yes, it is also a very narrow range, or a bottom side of the prices. Downside is very, very limited, hardly any, if it happens. Now, you said one more thing. I'm sorry, I forgot your last question. You said about the peas. This was your last question, or you
Yeah,
wanted to
this
say?
no, no, this was the last question, and actually, like, resilience of Canadian farmer, because last time also,
Yes.
before the duty was imposed, people were thinking that, like, the destination price is gonna fall, but Canadian farmer stood firm. I think the Canadian farmers, they have no nonsense approach, like, if it is not this, that I'm not selling. And I think there was a question by Jayesh bhai. So the number I was talking about, the carryover of African tour in India, it is in hands of traders and importers. I'm not talking about at the origin. It is in India, but actually, like, still people are struggling to sell it off and like, get it into, because there is already expectance of, like, the lemon, as well as our own tour just round the corner. So people are, because of OTR, that conversion ratio and all that. So interest in Africa is limited. Now, please carry on with the lentil, sir.
Yeah. So here, like, Deepak ji, when we talk about lentils here, in Canada, we talk about both red and green. So let me first, give an idea about what the red lentils is all about this year. So red lentils production, initially, so the acreages were more or less similar. And the yields were not comparatively better than last year. But when we look at the total production, I would say the production is ending close to 1.8 to 1.85. This I'm talking about only the red. So which is not huge. Still, I would say a supply or the carry of about 200,000 tons. So total supplies of close to 2 million tons. That's not, again, a huge production as we are talking about yellow peas. Now, yes, definitely, what Australia can do, because they're experiencing huge production, at least 500 to 600,000 tons more compared to last year. But look at the prices of red lentils. We are talking about a price of $500 CIF, whether it is container or big boats. 500 prices of $500 is a very comfortable number, especially for any market. You talk about Turkey, you talk about Pakistan, you talk about Bangladesh, all the big consumers in the markets. I think it is a very, very good number. And you might have seen recently, despite a huge production, the Australian prices, lentils prices have jumped up. Not only Australian, the red lentil prices. This year, when we talk about, the red lentils, not only from the Canadian perspective, who else can have a bigger demand? Look at Turkey. Turkey is I think after India, Turkey is the biggest buyer of red lentils. They are suffering hugely this year on their production. Their production is estimated to be somewhere 125 to 150,000 tons of red lentils, and they are also expected to import record red lentils this year. Their total lentils import are projected to be somewhere like 850,000 tons, out of which I would say red will be at least 600 plus. So they are not going to get this type of quantities from the Black Sea. Yes, right now their focus is on Black Sea because of the proximity, because of the lower prices. But when you look at the prices of red lentils, I'm talking about in Canada we call it crimsons, red type of lentils. But when you look at the prices, we hear the track prices are somewhere like 425, 430 range. But when you talk about the boat is like 500 to 505, maybe 510. This is the crimson prices in India or SIF destination markets. So now when we talk about that, okay, how do we see? So production wise, we are not huge. Production is barely sufficient or probably a little higher compared to last year. But look at the demand. There is a demand. Turkey is there, Bangladesh is there, Pakistan is there, Egypt is there, Sri Lanka is there, India is there. All these countries, they're looking for this. We have Ramadan, just Ramadan demand is shaping up. So, supplies wise, I don't know about the Black Sea, but shipments from Kazakh, Russia, they are not able to, put the pressure on the prices of red lentils, as they used to do before, because the supplies are not coming. Every month we have supplies or exports to Turkey from Canada, which means that there is a demand, there is a flow, and there are exports happening. Red lentils, I don't see, any downside from here in Canada. I don't know about Australia, how they pan out in next few months. But as far as India is concerned, I think the importers are happy. The exporters in Australia are happy, and exporters in Canada, of course, we are not happy when it comes to container prices because, it doesn't make sense for Indian importers or any other importers to buy, but bulk vessel trades are happening like with a FOB price of about 440 or 450, your SIF is close to 500. So it makes sense for, especially in the supply chain between the big boat exporters and those importers. So prices here again, the more chances of prices going up. What about the production and all? Like in lentils, it's more susceptible than peas. What we have seen is we have not seen huge, yields. I think in red lentils, we see yields of about 1.7 to 1.8 tons per hectare. We call them in bushels like about 1800 to 1900, pounds, But on the other side, as I said, production wise, we are very much comfortable. What the farmers will do, they're not very happy with these prices, but they're okay. But I don't think, they will sell lower. So there will be reserve selling if prices drop or the demand drops. But I don't see the demand is dropping. If India is not there, Turkey is there, Bangladesh is there, Pakistan is there, Dubai is there. Dubai is a big market of 200 to 250,000 tons of imports of red lentils. So when we look at all this, red is more balanced. I don't see any downside on the red, rather upside. So if India comes with a little bit of more demand, then I would see prices jump by at least $30-40 from here. This is in general about the red lentils. And if you have any questions, I can answer on red lentils, and we'll move to a little bit on green lentils, which we can complement with the pigeon peas scenario.
No, sure. So, first of all, I would like to add here, India would be importing close to 400,000 metric tons of lentil additional than the last year.
Oh,
Our crop seems to be a little bit shorter, but again, not too many people are vocally talking about it for various reasons. We have again on ground the survey which we believe we would be having a crop which would be shorter than the last year, not hugely short, but shorter than the last year, and at the same time, our carry is hardly existent like last year. Last year, we started with 600,000 tons, right, as a carry within the private and public, government as well as the private traders. This year, we started with hardly 300,000 metric tons. And then some carry was built up, not the carry, I won't say carry, but some additional inventory was built on ports. Currently, also on ports, there is close to 280,000 metric tons on the western part itself. But yes, as we pan out, the impact of the squeeze is going to be here. We'll be importing at least 300 to 400,000 metric ton more. So as you rightly mentioned, the demand is going to be robust for lentils for sure in India this year.
Yes. This year, sir, I mean, just to sum up on the red lentils part, when you look at the global S&D this year, people talk about, more production of about 1 million tons of more red lentils this year. So basically, and the major component is Australia from 1.2 to 1.9. So we talk about 700,000 tons of extra production coming from Australia. Canada, I would say maybe 50 or 100,000 tons. So Canada is practically no increase. But when we look at the Black Sea side, yes, you can say another 300,000 tons of more production between Russia and Kazakhstan put together. So we talk about 1 million tons of more. But as you rightly said, you have India on one side, right? Which is at least 300 to 400,000 tons if they increase that. So 300 to 400 has gone there. And look at Turkey. Turkey used to import on an average 500,000 tons, but this year they're talking about more than 870,000 tons. And the major increase is coming in red lentils. They used to have an average crop of about 300,000 tons of red lentils. This year they're talking about, so at least 200 to 300,000 tons of demand, extra demand is coming from Turkey side. So 400 from India, 300 from Turkey, you have 700,000 tons. Moreover, sir, when you look at the prices of red lentils, I think you believe with me that a price of 500 or round about 500 to 510 is, I think we are seeing these prices in, the lowest prices in last few years. And these are very sustainable numbers, right? For even importers today.
True.
So again, there is hardly any question of downside. Yes. Can they increase? Yes. It depends again on, the demand. So it cannot increase by $100 or $150 as we have seen in last few years. The reason being is because you have Australia, so which will cap the gains, from that side. And Turkey will always prefer, because is a big buyer, Turkey will always first prefer, supplies from Black Sea. Of course, they have Canada, but they will first prefer. But let me tell you, the prices from Black Sea are no more lower. They're almost at par. But when you get, Canadian or Australian at the price of Black Sea, anybody would prefer Canadian or Australian, than Black Sea. So this was about the red lentils, sir. Now let's move on to the green lentils part. Now, this year, this is something very tricky, and I think we all have to admit, like as a Canadian exporter, I would have to say that, this year, Canada has seen unprecedented production in terms of green lentils. So here, sir, when we talk about green lentil scenario, it's hugely, so there are three types of green lentils. One, we call it the large green, we call it lairds, which is mostly imported in India and many other countries. We have a medium richly type, and we have the small one Eston's type. Now in general, like, when we talk about that, there is a, so in India, we call it like, that the Canadian lentils, the green lentils, as a replacement of pigeon peas in India. So this year, when we talk about the production scenario, last year, suppose we had a crop of 850,000 tons of total green lentil. This year, we are talking about 1.7 million tons, almost double of last year. So production wise, and then if I tell you the breakup, what India prefers is the late type, the large green. And the large green last year, let's say, was about 500,000 tons. This year, we're talking about 1.1 million tons. So this is where we are seeing a huge production. And if I tell you in terms of prices, like last year, in the month of August, September, we have seen prices of over $1,200. And those prices today, this I'm talking about the SIF prices, we are talking about 630, 640. So you can see a drop of about $600 because green lentils, moves as tour moves in India. So, last year, I think tour, at the peak, we have seen about 1,200, 1,300 levels. From there, it starts dropping. So it is in very line with or sync with the tour prices. Now, how do we see? Now, currently the track prices are somewhere like 515, 520, which translates to about 630, 640. Now a tour prices, like when you look at lemon today, I think in India, lemon is even more than 740, 750, somewhere close to lemon prices. And here, so you have a replacement of tour in terms of green lentils from Canada at about 650. Now the question is
Deepak ji,
why?
let me just add one small thing here. In fact, some of the southern tenders, they allow this also. So
Yes, sir.
there is already like, it's not that it is you want to be alien, right? This can factor in. It's a very, very important point. Thank you. Please
So
continue.
this is number one, sir. There are two more points here with regards to, because we are comparing, green lentils with tour. We are coming to this green lentils. So now on this, so number one is the price. So when you look at the tour price of 750 today versus the green price of, let's say, 640, 650. So you have a discount of $100. But in lemon, you don't have an import duty. On Canadian, you have an import duty of 11%, right?
Right.
So which makes up to that thing. Secondly, Myanmar, as we discussed, like, Myanmar is the proximity, because of the proximity, people prefer Myanmar because, you get the cargo in 7 days or 10 days. So it basically caters to your spot demand. From Canada, you have to take at least 2 to 3 months. So right now, since the markets have shifted in last 1.5 years, what we have seen in India. So that's why, they always prefer, from Africa or Myanmar, because of the proximity to cover the spot demand. Now, there is another factor, Deepak ji, which I think, again, I'm not an expert, but an industrialist or a, processor can tell you more in India that when you make dal out of lemon or pigeon peas, I'm told that, the realization is not more than 70% at best, 70
No,
to 75%.
I would add here, Africa is around 70. Lemon goes up to 77 to 78 if it is of good quality.
Right. But when we talk about Canadian lates or the Canadian green lentils, it is closer to 85 to
I know.
88%. So, so you have an extra, so, which allows, so if there is a increase in pigeon peas prices in India, this can have an impact in Canadian prices and, the imports of Canadian green lentils also can start into India. I'm just trying to explain, the dynamics of the price
And
differentials.
no, perfectly. But Deepak ji also like, educate me and our audience. I think there is a phyto issue with Russian lentils, right? India is not allowing that because of some phyto issues, green lentils from Russia.
No, sir. No. India, this Russians is coming, sir. It's not that they're not coming. What I understood is India has already imported this year about 25,000 tons of green lentils from Russia.
Okay.
Now, so there is no issue with phyto. They had some. What they did is the Indian phytosanitary authorities they requested for some more clauses to be added in the phyto, which they later on added. So there is a flow. If you see, you can check the imports by DGFT or you can find. So there is a flow right
Sure.
now. But the problem is, when you look at the Canadian green lentils versus Russian green lentils, so you have a grading system. We have a standard product. You have a grade number 2 or grade number 3 or grade number 1. But in Russia, you don't have. Every lot differs. One lot is grade number 1, one could be grade 2, one could be sample grade. So this is the major issue. Secondly, sir, like, although, because, Russia is Russia, believe me or not, there are banks not making the payments for Russian origin cargoes, even in India, although we call, India and Russia are friends, but these are real issues because we face. So not everybody can buy Russian goods. This is a fact also. Secondly, there is only one shipping line which is flying between Russia to Indian ports, which is MSC. Rest all are NVOCCs. So you have an issue with that. Then the insurance cost is exorbitant today from Russia to India when we talk about the marine insurance compared to Canada or other places. The only advantage is, I think, the transit. Transit is about 45 days compared to Canada about 60 days. So that's the only difference. So this Russian green lentils are coming, but because of quality, and look, the price, like today, you want to buy Russian green at $600 or $610, or you would prefer to buy Canadian at 630 or 640 when it's a matter of 20 to $30. And if the price is, because it's not, as you have seen, you said there is a shortage. That's why the prices are going up, right? The tour prices are going up because there is a demand. So if there is a demand, if there is a potential, they would prefer a better quality, compared to something where they have more issues in terms of qualities. Russia has come up with a huge production in last few years, but they have not been consistent with their quality. That's their major issue. From nowhere in last 5 years to 300,000 tons of close to 300,000 tons of production of green lentils is a massive achievement for any country or any producer. So coming back to, sir, the green lentil side, yeah. So again, Canadian farmers, because it's a Canadian product, they are reserve sellers. They're not going below this. Again, if India does not come, probably another $10-15 of downside, but they will still hold on. They will not sell. Even if they need to sell, they will decide it before the new crop arrives. They can cut down on the production. So on the sub, and the good thing is, since India or other places, the prices are going up, so which can provide a support to Canadian lentils also. I'm not saying, because even I don't know what will happen after 31st of March with respect to Indian, policy, whether they allow, tuor or lentils, free of imports, or basically with duty or more duty or less duty, that the time will tell. But in general, as we see in the perception, these prices are very much sustainable, even for Indian market. Now the question is, how much India can buy? I don't know, maybe 300,000 tons, maybe 200,000 tons, just to make up for the tour deficit. But in general, the prices are very much comfortable for India. For Canada, the farmers are not, too interested in these prices, but they will still sell these prices. With regards to the production and going forward, I believe there will be huge carry, but the farmers will take it to the next year. They will not be the cheap sellers here. So price wise, we don't see too much of downside. As I said, probably in the month of May or June, if there is no demand, if nothing is happening, then we might see some downside. Again, very limited downside, maybe $10-20. I don't see more than that, sir. So yes, because since we are talking about India and Canada, so I'm not covering, Algeria and, those are other markets of Canadian green lentils, because Canada supplies a lot of green lentils to Latin America, Mexico, and we do supply to Algeria, Turkey, because they are not existent right now in this communication.
Perfect. So first of all, thanks a lot, Deepak bhai, for such a elaborate presentation. And I think if I have to summarize based on discussion which we had, I would say that I would be a little bit bullish on yellow peas. I would be extremely bullish on both type of lentils. And when it comes to desi chickpea, I think there possibility is sideward movement, little bit of volatility going up, going down. But the type of war chest being created within India and in Australia, I don't see too much of bullish sense in chana. At the same time, if I can request all my speaker, if they can start their video, because I want to share one good news. In fact, this is our fifth session, Deepak bhai. Like, we are. Thank you, Jayesh bhai. So this is the fifth session. We started with maize, then we went to wheat, rice, soybean. And we are just currently doing through LinkedIn Live, right? Though it is on YouTube also, but the focus was LinkedIn Live. And I would like to congratulate you, all of you, that we have crossed first time in 5 sessions. It's in front of me, 1,100 live viewers, right?
Oh.
So like, that's a great achievement of this panel, right? That there were 1,000 people who got into it. They found what we are talking at least interesting, right? And then I have to go into figure how many minutes they have seen and all that. But 1,000 people, they have seen our faces today. That's a great achievement. And this is also like, nothing to take away from the great work being done with so many events they are doing. But I found this to be a very interesting way, right? Where like, 1,000 people sitting in their rooms, like, they can listen. The physical event gave you possibility of networking. But this type of event give you pure knowledge. And thanks to my awesome panelists, like, you have shared such a beautiful perspective. Binod bhai, Jayesh bhai, Maisam, definitely Deepak bhai, and our friend Sergey from Russia. So all of you, we have contributed in like, making this a very, I would say that first time we crossed within the live. Eventually, like, it is a video available, people see, and then it reaches 4,000, 5,000. But in live, reaching 1,000. So thanks a lot. I love all of you, and thank you for supporting. Yeah, Deepak ji, please.
Deepak ji, I'm sorry, before we conclude this presentation, sir, I have a question for you basically. As an expert, sir, like, we hear that, okay, India is going to achieve self-sufficiency in next 2 years or 3 years or 4 years. We hear these statements quite often nowadays. How do you see the situation, sir, India's pulses scenario in terms of demand in next 5 years or 2 years? Do you think India can achieve self-sufficiency, or the imports can go down, or the demand will increase, or the imports will increase, sir?
No, sir,
Sorry,
this is very, very interesting question. And in next 5 years, we would be importing close to 7 million metric tons. Currently, this year we'll be at 5.4. Last year we went up to 7 because of various reasons, and then we also had surplus and then the crashes and all that. So typically, like, 7 million metric ton range we'll have by 2035, that is 10 years down the line, where the government want us to be self-sufficient. We will be importing 9 million metric tons of pulses.
wow.
Right. So the beauty is that our demand is also increasing, right? Our production will also increase, but definitely production is not going to match up to our demand. India is becoming like, upper middle income in country. We'll consume more pulses, we'll consume more protein. But for us to believe that we will be able to catch up, like, at a 30% increase in productivity over next 10 years, it has never happened. And this is not going to happen in India also. And the acreage increase, there is no possibility. Please, Jayesh bhai.
Sorry, I think one of the important factor which we are forgetting here, is that today's our food habit is a very pathetic, to be honest. And sorry to use that word, but it is a reality that we are more
Sir,
carbs.
Marwadi ko bol rahe ho, food habit ka.
We are more carbs consuming, and in fact, to be honest, that the industry suppose that if we just increase our consumption of protein by 10 grams a day, the requirement of import could go to the significantly up. Today, we are actually to the WHO, as per the WHO, we are not even 50% of our protein consumptions to any developed nations or the Europeans are compared to. We are almost 40 grams, below 40 grams, even 40 grams we have not reached. Requirement is about 90 grams per day for the thing. So if we reach 50 grams a day,
so per gram of your body weight is pure protein you should consume, right? When I
correct.
Say, that's why I was saying, so when I say normative demand, so normative demand of pulses India currently is 38 million metric tons. We are short by consuming 10 million tons short. And as we become a middle or upper middle income country, people will start realizing that actually, like, we need more proteins. 70% of our Indian population, they are either full-time vegetarian, or they are sometime consuming eggs or meat. So it is going to be coming from pulses. So India is going to become the hub. And in fact, Niti Aayog has said that by 2047, when we having 100 year of independence, right? Our requirement for protein through pulses would be 48 million metric ton. Sir, you cannot wish away the fact that our farmers can grow
No,
everything. I love.
I think just I was trying to give up on this thing. I think this, it looks very good that India could be self-sufficient. I think rather than we should be focusing more on that how the people could be a more healthy society as opposed to the focusing on a couple of million tons of the pulses. That's what
Sir, in fact, there we have to follow the model of China with what they did in soybean. You continue to
Correct.
import, you continue to build. So even if you see 220 or 2010, hardly China was producing 10 million metric ton. Currently, they produce 20. They have doubled in 10 years. But at the same time, their requirement has gone up by 4 times. So they still import. Now they are looking at, okay, fine, we'll reach up to 30 million metric ton. That is 25% of their consumption. So see, again, in India will also, because once our incomes increase, we start looking at more proteins, we'll consume more protein.
Deepak bhai, we reached from 12th place to 4th place. Now that is already a clear indication of economy has reached the world number 4. So it's a consumption pattern. I think living standard has gone up significantly up.
Exactly. And at the same time, see, I appreciate government for thinking about it, talking about this thing. It at least, right, it gives a vision, right? It give the vision to the scientist, because nobody was doing research on pulses, sir. You'll be surprised. Last good research on pulses was chickpeas. And when we did it, right, you see that actually what happened in our chickpea production, right? From
No,
super net import.
I'm just coming from the false narrative of this thing. Rather than the correct narrative should be that we should be encouraging people to eat more protein as opposed to
Yes.
just correcting a false narrative. Nothing else other than that.
Perfect. So thanks a lot for awesome panelist we had today, and thank you. And so 1,000 is a good number. We achieved that, and all because of all of you. Keep supporting us, and looking forward to have more session with you going forward. Thank you, sir.